horsepower. I now call upon our Honorable Director, Dr. Dinesh Neelkant, to share his insights and welcome the gathering. Over to you, sir.
Thank you very much. Good morning. Pranams to all of you. And am I audible?
Yes, sir.
Yes, sir.
Yes, sir.
Now some disturbance is there. If you can mute, that will be nice. Okay. Anyway, thank you very much. So respected Honorable Vice Chancellor, Dr. Raj Singh, Dean, Dr. Harold Andrew Patrick, Area Chairs, Dr. BRR and Dr. Preeta Chandran, and entire faculty members of Jain University CMS Business School, participants, delegates, the panelists, and my dear students. On behalf of Jain University CMS Business School, I welcome you all for this International Virtual Finance Conclave. When BRR sir told me that there is something like this happening on International Virtual Finance Conclave, the first point which hit me was, what is the topic? And the topic he told me was the digital transformation. And suddenly the point which came to my mind was that if at all today, after pandemic, you go anywhere in this country, everybody is talking digital money. And it is so evident that the digital transformation has already creeped in, even into the remotest area of this country. So welcome to digital transformation. Pandemic has had a profound change on our social and professional lives, forcing us to quickly adopt to new social norms and further embrace technology. Now, with this, what happened was there were changing behaviors, and these changing behaviors compelled companies to invest in digital transformation. Finance was not an exception. In every field of business today, we come from a business school background, you'll find that everywhere the digital transformation is happening. The finance organization has emerged as a driving force for this transformation, and innovative way of offering financial products and services for customer retention has become the key factor. All the companies from the finance world are coming out with different concepts, are even trying to adopt something or the other where they be different. There are so many things which are getting revolutionized into the field of finance, and every time I find that there is something new. Today's conclave is going to help us with the panelists and the experts that what is happening in this area. Now, are we ready for this digital transformation? So for this, I think it will be nice if we listen to the experts and get their valuable suggestions for this, and that can be very helpful to all the students and the teaching fraternity. Thank you very much for giving me an opportunity, for welcoming all of you. My pranams to all of you, and I wish best of luck to all of you.
Thank you, sir, for rendering the welcoming address. I now invite our Honorable Vice Chancellor, sir, Dr. Raj Singh, who has been crafting the new normal to take Jain deemed to be university to new heights, to render the keynote address. Over to you, sir.
Thank you, Sanket and Pranamya, for conducting the proceedings so well. Dr. Dinesh, Dr. Harold Patrick, BRR and Preeta ma'am, who have been organizing this conclave. All the speakers of the day, I can see some of them already joined. Warm welcome to all of them. All the delegates, researchers, scholars, my dear students, ladies and gentlemen. I congratulate each one of you to organize this conclave on a very contemporary and relevant topic. Nothing could have been more relevant today. You know, being a student of economics and finance all my life, I've witnessed the term Fintech from taking birth to evolving and becoming synonymous, becoming a catch-all term for any technology which is used to either augment the existing system processes, streamline the existing system processes, digitize or even disrupt the traditional way of offering financial services. I think I'm more interested in augmentation and disruption, and that's what is all pervasive today, education being no exception. And we have been responding to this. We have been fine-tuning all the courses and programs, and the way we implement teaching learning strategies. Everything has undergone a change overnight. You all know that how things changed 1.5 years ago. Previously, we ignored certain things, refused something. Next day, we welcomed and said nothing could be better than this. Acceptability of human beings changed and has been all-time high. At least if I take a walk down the memory lane, we have been never so forthcoming and accepting the technology as we have done in last 1.5 years. I think during COVID, thanks to digitization, thanks to technology, our banks and financial institutions delivered and delivered well, whether it was individual services or some of the government schemes. They were standing there with us like frontline COVID warriors, had a role played not less than anyone else, like doctors. So I think we need to congratulate our banks and financial institutions for the same. I was trying to understand fintech, and if I have to give a comprehensive definition, which is meant for the students, not for the experts, of course, it refers to all the softwares and hardwares, which also I think includes algorithms and apps developed for computation mobiles, particularly smart mobiles. And of course, that I attribute to tech advancements and miniaturization of technology. You would recall that from how mainframe we came to desktops, laptops, and palm tops, and now I'm talking about finger tops and nail tops kind of gadgets. This miniaturization with the wireless connectivity has done the magic. I'm sure it's not difficult for us to understand in whatever way we have been using it. I think it also talks about the connected piggy banks and virtual reality kind of platforms, which help us transact any financial transaction. But I think at the back end, we also must be mindful of the fact that these transactions require not only dealing with the security and privacy issues, but also systemic changes. I think I remember when I was a student during mid-1990s, when we introduced credit and debit cards. And when you insert your credit card in an ATM machine somewhere in London, and your bank account in Delhi or in one of the maybe Indian banks or foreign banks, you must be surprised what all happened and how much time it took. When you insert your card, depending on its Visa or MasterCard or any other card, it gets connected to those companies wherever they're located in US and elsewhere. And it identifies the country code, it identifies the bank, it identifies the branch, and gets connected to your bank account. And if it is a real account, it asks you or it prompts you to enter your password. And once you do that, it checks the balance in account, which is Indian rupees in Delhi, converts this into maybe American dollars first and then sterling pound or directly pounds, depending on the currency used, and then delivers you the notes through the ATM machines. And total time taken was 18 seconds. Now, it was not only technology, which was representing convergence of information and communication technology in those days, but I think you would recall some of the senior ones. We had just allowed convertibility of Indian rupee on revenue account and capital account. And that convertibility helped us to flawlessly, seamlessly convert one currency into another, of course, subject to certain limitations. And that at the back end facilitated operations of these credit and debit cards when you want to draw money. And mind you, this technology seems so primitive today when we interact. We hardly make use of debit and credit cards. We don't take out of our pockets and purses. There are apps, there are speed at which I think fintech has been coming to our lives, entering our lives. It has certainly affected, as I said, the education and the courses and programs we offer, not only as specializations, but also as independent courses. Um, Small services, very ordinary services in day-to-day life, whether it is depositing checks in my bank account, or moving money from one account to another, or paying the bills or for the services, or for that matter, applying for any financial aid and loans and other facilities. It's all online. Last 1.5 years, we did not move out at all. And I think we could successfully transact all the transactions within, of course, the constraints which are presented by COVID pandemic. I'm sure I was looking at the sessions and the details of panel discussion. We have, I think, chosen experts who will be discussing with all of you, interacting with all of you. So I'll not be going into the nitty gritties, even though I'm tempted, because I hardly find any topic in economics and finance these days being more towards administration. And that makes me crave for, I think, participating in these kind of events. And I thank CMS Business School and Dr. B.R. Rao, who thought about it and then thought that I am someone who's relevant. Thank you, Dr. Rao.
Thank you, sir.
I must mention at a very macro level that as we get together during the pandemic and post-pandemic and try to write the India story, I think three, 4 events will definitely shape the script of this book or this story. And one of them is what happened on 8th of November 2016, the demonetization. And that made us so comfortable with the online transactions, non-cash transactions, which we didn't realize. And whoever transited from the physical transactions to online transactions, they remained there, majority of them. And that, I think, helped us survive with greater ease during the pandemic. Imagine if we had not been used to this. And people like me got used to it next day, because on 9th November, I had a wedding in the family. And 8th November night, 8 o'clock, the Prime Minister announced that all these notes are not real notes tomorrow, rather midnight, 12 o'clock onwards. And we switched over in a matter of 4 hours that what kind of strategies we have to adopt. So this was the first event which happened in the recent past. The second thing which happened in our country is Jan Dhan Yojana, and how we opened, I think, millions of accounts, connecting them through technology, which we have witnessed how it helped us disburse the economic help to all our people in the country. And third thing, of course, using technologies and connecting all of them through Aadhaar or other methods, so that we can see it in an integrated manner. Friends, these 3 events, particularly facilitated, intensified, and expedited by technological advancements, will greatly shape the story called India. Imagine if all these 3 were not there, what would have happened? I'll leave this question to each one of you. Today, as we see the surge in stock markets, and many people say, how can you explain this? The gold is also high, stock markets also high. Otherwise, mostly you'll find inverse relationship between the two. Story which is being written is difficult to explain. And when we're sitting on huge forex reserves, and there are many, many other economic fundamentals which we look at pricing in the stock markets. I'm sure during the day, layer by layer, all the experts will explain to you how stock markets are behaving the way they're behaving. Is it sustainable or not sustainable? What position you should take? And I think technology has, we have seen, reduced the speed of the transaction, but also catch the micro movements in the pricing of financial assets, which make us take positions. So I'm sure by the end of the conference today, each one of us participating will stand wiser, will stand richer in terms of understanding of not only fintech per se, but many of the financial concepts in the light of digitization. I thank and congratulate everyone, particularly our speakers of the day who have taken our time and decided to be with us and our students, which will greatly help them to plan and, of course, to launch and then ensure the success of today's conclave. Thank you for having me, Dr. Dinesh and BRR. And I wish everyone all the best. God bless you all. Thank you so much.
Thank you, sir.
Thank you.
Thank you, sir. Thank you.
Thank you, sir. Thank you, sir.
Thank you.
Thank you for rendering the keynote address, sir, and for setting the context and your leadership. I now call upon our Revered Dean Academics, Dr. Harold Andrew Patrick, who has been watering our young minds to grow into mature and strong trees we are today, to address the gathering. Over to you, sir.
Honorable Vice Chancellor, Sir Dr. Raj Singh, respected Director, Sir Dr. Dinesh Neelkant, esteemed Area Chairs of Finance, Dr. Raghavendra Rao and Dr. Preeta Chandran, esteemed colleagues, very distinguished industry experts for this conclave, registered participants, and dear students. A very good morning. It is a great pleasure to welcome each one of you to the International Finance Conclave, Fintech, Digital Transformation in the Pandemic Era, organized by the finance area of the CMS Business School, Jain deemed to be University. Uncertain times calls for responses that are not only effective but relevant to the times. Organizations and employees have transformed the way they think, feel, and respond to customer needs and wants in ways that keep them above their peers. This International Finance Conclave has 8 top-notch experts in the finance domain to deliberate on the new responses that their organizations and employees have delivered over the past few years, keeping them competitive. We have Mr. Govinda Batada, Chief Investment Officer, Proprietary Fund, Mr. Daesh Angle, Director Finance, Capita, Ms. Surabhi, Associate Director, Capgemini Invent, Mr. Raghavendra Prasad, Vice President, Digital Transformation, JP Morgan, Mr. Sadashiv, Director, Business Analytics, Honeywell, North Carolina, United States, Mr. Gautam Math, Principal Finance Officer of NSW Government, New South Wales, Sydney, Ms. Bhavna, Manager, Treasury, ICICI Bank, and Ms. Harisha Rao, Associate Principal, Data Science, Infosys. We have 2 speakers from 2 continents, from the US of A and Australia. It's a great pleasure to bear this inconvenience in terms of time zones and being committed to this particular conclave to make it a success, not minding the time zone and inconvenience. We are very grateful for it. Thank you all to all the 8 experts for accepting our initiative and sparing your valuable time to deliberate, discuss, and dialogue on digital transformation. The next 3 hours will not only be a storehouse of experiences and practices shared, it will also include the stories of successes and challenges experienced by organizations and employees to be competitive in an uncertain environment. It will be stories of thriving in chaos and pictures of the future of the finance sector. As a psychologist, my only concern in terms of some of the research that I've gleaned over the 10 years is I think 10 times if I have money in my pocket, what to do. But I don't stop to think anything if I have to use a digital currency. And then I start to think why I did use the digital currency in a latter date. I don't know how this aspect of human impulses can be curbed in a manner that not only that you would use finance prudently, that the digital divide as well as the digital transformation could shape behaviors to deny immediate gratification for substituting and looking for something that would be much beneficial in future. I wish this international conclave and once again thank the organizing team, the finance domain of the CMS Business School, James deemed to be university, and all the experts who have agreed to join us to share their valuable experiences to the others, to all the August gathering here. Thank you and all the very best.
Thank you, sir. Thank you, sir, for doing the honors and academic leadership. Sanket, did you have your power breakfast this morning?
No, Pranamya.
Cornflakes, health drink, or energy bar at least?
No, Pranamya.
No worries. A power packed dose of vitamin K, K for knowledge, is about to be served. We are delighted to have with us an exciting mix of talent, experience, wisdom, strategy, and a wide spectrum of business decision making.
We have an August panel of 8 experts to share their experiences and deliver their insights. Now, I request Dr. B.R.S. sir to speak a few words.
Thank you, Sanket. Greetings. Good morning to everybody. Honorable VC, Dr. Raj Singh sir, Director, Dr. Dinesh sir, my beloved Dean, Dr. Herald sir, my dear colleagues, dear industry experts, participants, I extend a warm welcome on behalf of Finance Area CMS Business School, Jain deemed to be University. I consider it to be my privilege and honor to particularly welcome and thank the industry experts. Sadashiv K. Vasista, he was our MATS alumni. Presently, he is working as Director, Business Analytics at Honeywell, North Carolina, USA. And right now it is midnight. Still he has joined. Thank you, Sadashiv. Welcome. Gautam, he is joining from Sydney. Welcome. Thank you, Gautam. He's a Senior Principal Officer at NSW Government Department of Education, Sydney, New South Wales, Australia. It is afternoon for him. Good afternoon, Gautam. Welcome. Govind Badada is alumnus of IIM Indur, Chief Investment Officer, Proprietary Funds. Welcome, Govind. Harish Rao, Associate Principal, Data Science at Infosys. Welcome, Harisha Rao. Bhavna, alumnus of IIM Indur, Manager, Treasury, ICICI Bank. Welcome, Bhavna. Raghavendra Prasad, Vice President, JP Morgan. Welcome, sir. Dayesh Angli, Director, Finance at Capita. Welcome, sir. Thank you for joining us. Ms. Surabhi Gaude, Associate Director, Capgemini Invest. Thank you. Welcome. And as far as these experts, when I approached them, at the very first go, they said, yes. In fact, they reacted positively without taking extra 1 second. They said, yes, we are going to help you. So when I connected over LinkedIn, they extended all the help. And in fact, all the experts, all 8 experts, they joined before 10 o'clock. What I say in Hindi word, Anushasan, of course, I tell to students, of course, now, student community, my dear students and other participants, look at the experts. They're all seasoned campaigners. They are in leadership role. They are great achievers. You will get to know more about them when we introduce one by one in detail. They have responded and they have joined in time. That's why they are leaders. That's why they are successful and accomplished people. And coming to experts, they represent various industries, IT, consulting, banking, investment banking, automation, capital markets, analytics, with a total cumulative experience of 100 plus years. Okay, corporate experience at leadership level, cumulative. And out of 8 experts, 3 are engineers, and rest are either they are chartered financial professionals or IIM background. I once again extend a warm welcome to all the experts. Then there is another important stakeholder in this conclave, that is participants. I'm very happy to extend warm welcome to all participants. We have 600 plus participants as of now. And as far as the profile of the participants is concerned, the profile is, we have a mix of students of our CMS Business School, other JJI institutions, other colleges, academicians, research scholars, alumni, entrepreneurs, and corporates. It's a mix of various background we have as far as participants are concerned. And coming to the conclave theme, as we are aware, the entire world is under the grip of pandemic. So there is a need to relook at the business transformation. So when you want to do transformation in the business, digital transformation is a tool. And our topic is fintech and digital transformation. Let us try to understand from the experts how this digital transformation is going to enable business transformation for the good of all the stakeholders. So in the larger interest of all the stakeholders, let us try to explore how these experts would help us, how the digital transformation and fintech is trying to help us in transforming the business in the light of the pandemic. And the plan is as follows. To begin with, each expert would render a session for around 8 to 10 minutes, and we can take 1 or 2 questions. You can put the questions in the Q&A, and then that's how it goes on. All the 8 experts would make the presentation one after the other, and at the end of all presentations, there will be a panel discussion where we try to answer some of the questions. And also I have got some agenda, in the sense I have some questions for the panel members in order to realize all the expected outcomes and larger outcomes we have kept in mind behind this conclave. So we try to achieve that through panel discussion. So fine then. So next thing is individual presentation by the experts and then panel discussion. And once again, I thank all the experts, all 8 experts who have responded to me and joined for this conclave and helping same as Business School, Finance area, same as Jain University. Thank you once again for your support and coordination. Fine, we are eagerly looking forward to hear you. And then over to you, Sanket and Pranamya. Thank you.
Thank you, sir. Now we begin the presentation by industry experts. The first presentation is by Mr. Govinda Badada, and I request Khyati to introduce Mr. Badada to the participants. Over to you, Khyati.
Good morning, everyone. I'm honored to welcome our first guest, Mr. Govinda Badada, an IIM Indore alumni, is an entrepreneur, founder, and Chief Investment Officer at Propriety Fund. Mr. Badada earned Masters of Science in Strategy, Consulting, Innovation from EDHEC Business School, a leading business school in France. He is a chartered financial analyst. Mr. Badada is an independent trader and investor passionate about long-term wealth creation. He is skilled at derivatives trading, long-term investing, equity trading, and techno-funda investing. During his time in IIM Indore, he was a member of Voyage Capital Equity Research and Investment Club. Having completed his internship at Vitamin Angels and Oxygen Service India Private Limited, he started working at KPMG as a consultant, later at PwC. He was the All India 19th rank holder of CA CPT examination, which is an inspiration to everyone here. He was the winner of KPMG International Case Study Competition and many more events like Chanakya, Mark-to-Market Company Valuation Event, Margin Call. We are delighted to have him with us and learn from his expertise. Now I request Govinda sir to render the presentation on the topic Fintech Landscape in India. Over to you, sir.
Thanks, Kathy, for this introduction. Thank you, Honorable VC Sir, Dr. Singh, Pranam to Dr. Neelkant Sir. Good morning to Professor and Dr. Patrick. And thank you for inviting us, Dr. and Dr. Preeta Chandan. And thank you for all the participants, scholars, researchers and have joined us. And yeah, so the topic I'll be sharing my thoughts on would be fintech landscape in India. Why I chose this topic is because it would set the stage for all the discussions we are going to have. And yeah, without wasting a lot of time, let's get into fintech landscape in India has for us. So this fintech, I think VC sir and Patrick sir, both of them shared their thoughts on what is fintech. So essentially, they were absolutely right on point in the on the fact that fintech is basically delivering products or services that you have delivered in offers through online channels now. So your banking, lending, payments, insurance, investing, all of these services, which are essentially the core of any financial industry in any country, they're now being delivered through online platform. Biggest transformation that we have seen. And why is it exciting? Do you think like why like B.R. Rao sir would have chosen this topic? Because if you see before 2016, before demonetization happened, since independent, number of non-cash transactions, which is digital transactions, was less than 5%. Since the last 60 years, the progress we made was we had 4.5% of total in the country which were non-cash. And since the pandemic, now today, if you see in food, we have progressed more than what we had progressed in the last 60 years. So now the number of like the percentage of non-cash transactions or digital transactions, they have grown to more than 2x of what they were before the demonetization happened. So that is why it is the most exciting space to be in right now. And like the core question, why is fintech needed at this point in time? A few reasons why fintech is the future of finance. First of all, there is a big behavioral change that has happened. People have started to spend more time online than offline. And when you see such a behavioral change, there is a disruption needed in terms of how services are delivered. If you see in 1990s, like Bajaj scooter, it had a waiting time of 13 years. But over time, when companies started to see a trend of motorcycles gathering more interest from people rather than a scooter, so you see value migration happening from scooters to motorcycles. Similarly, in 2003-4, when Airtel came to India and launched its services, suddenly people started to feel the need of having a portable phone instead of a landline. So these are all like disruptions where which help new companies serve the needs of a behavioral change that has happened. And that is exactly what is happening right now. Since Jio has come into the picture, your internet cost is lowest in India across the world, and that has enabled people spending more time online than offline. If you travel anywhere, if you go to a local dhaba, if you go to a tier 3, tier 4 town, if you go to a tier 3, tier 4 village, you would see people spending a lot of time on their phones. You would see people scrolling through YouTube. You would see people scrolling through some local regional apps. So that essentially means that the like people have started to spend more time online, and therefore delivery of services have to happen online. And apart from this behavioral change, there are a few other benefits which fintech offers. First of them is it offers automation. Companies like they can use data to evaluate whether a lending proposal is good enough or not. They can use data to evaluate whether the user who is transacting is an authorized user or not. So all of this can happen within a period of like a second, a couple of seconds, and the transaction is authorized. So that is another benefit. It offers automation capabilities to traditional fintech financial services players. Then there is again faster delivery of products and services. You don't need to wait and search for a bank who is going to give you a loan. You can download 4 or 5 apps which offers personal loans, and you can apply to all of them. And within a couple of days, you'll get a response in terms of how much loan can they offer you and at what interest rates. So there's a very fast delivery of products. There is no wait time in you as a user or as a consumer to buy or like get access to any service. Then you have a very good personalization of products that can happen as fintechs are aging. they have more rich data to mine, and companies have been mining data to find out what user wants, which kind of products, or what is the right product which the user is looking for. You would have seen, if you, let's say, like, these are very general digital examples, but they also apply to the fintech domain. For example, if you go and search for any product on Amazon, and once you go and click read through that product, but you don't buy it, you would see that as an ad in any of the other apps or any browsing that you're doing on any of the browsers. So that means that there is some personalization that is happening to what products and services are delivering. And the biggest benefit that comes with fintech is there is a very low cost, low unit of delivering any service. If, let's say, a bank would need to spend, let's say, an 5 days to evaluate a loan application, now because of the data, they don't need to use that resources 5 days of salary to understand whether they should give out a loan or not. So that brings in a lot of scalability in terms of can grow, and in terms of how the fintech industry in India looks like. About 22 fintech startups in India. This is as of 2020 year end, and from them 40% are in the payments landscape, about 30% of them are in the digital lending landscape, about 25% of them are in the wealth tech and personal financial management landscape, then about 5 to 10% are in insurtech, regulatory tech platform, and the remaining they are either neobanks, they are either crowdfunding platforms, they are either remittance services, they are either crypto or blockchain analytics, they are either coupon and B2B service providers. So we have seen that in the last 7 to 8 years there are fintechs that have emerged. About one of them is a decacorn, which is Paytm. About 7 of them are you have at least 20-25 startups which have a valuation of at least 100 million. So what has accelerated the growth of these players? So first of all, there is actually fintech is the second largest funded sector only after e-commerce. And if you see why is market valuing these businesses, because a tech business has very consistent cash flows. Business has very consistent cash flows. The value that an investor would assign to such a business is much what you would assign to a business which has very inconsistent cash flows. And that is why these funding coming into for these platforms. Then like government has introduced AI and IMPS services. It's the backbone of any digital transaction that you're going to make. So that payment structure is ready, and like those are new age infrastructure. No country in the world has something API. New age infrastructure rupees without anyone paying any cost transfer. Then you have regulatory changes, very forthcoming regulatory changes. Like one of them was demonetization, which helped accelerate people's comfort on digital transactions. Then you have over crores of new accounts opened in Pradhan Mantri Jan Dhan Yojana. You have RBI, which has accepted P2P lenders as NBFCs. So these these regulatory tailwinds, they are just improving day by day, and they are improving the coverage of their regulations. So like you would see an industry would not see a lot of participants if there are no clear regulations for the same. And that is what is changing right now. And again, there is a very big migration of people happening from offline channels to online channels. People are spending more time and money on online channels, and this has only was accelerated by COVID, because like people can't travel, people have to work from home, so everything you have to do is through the screens that you have. And so these are the enablers for the fintech industry in India. And we are seeing a few trends across these fintech players. One of them is we are seeing very in-depth partnerships, or like very close partnerships and integrations between fintech firms and traditional firms. For example, you would see ACO is offering insurance on IRCTC, or when you buy a phone on Amazon, you see ACO protection plans. An example of a company which is partnering with a financial services firm is City Cash, who partnered with ICICI Bank. So these fintech firms are realizing the importance of distribution channel that offline player have, along with their own capability of offering a product or a service which adds value to a traditional bank or a traditional firm's offerings. Then you would see there is like fintechs have been offering personalized solutions and better risk assessment because they have started to gather. They have now at least 6-7 years of data, and 6-7 years of data is not the important part. They have seen at least one business cycle now from 2014 to 2020, and when you see data across one business cycle, you get the right insights. You don't get very biased insights because that data has went through all the types of markets that you can see. Then there is a move towards a super app. We have heard a lot about super apps in Korea. We have heard a lot about super apps in China. That is something which apps in India are trying to do. If you see, Paytm has become a platform to do anything like which money in your wallet can do. So it can be either spending or saving. So in spending, you can make bill payments, you can transfer to your peers, you can transfer to anyone in the country. And in saving and investing, you would have Paytm has launched Paytm Money, which is a brokerage firm. Paytm will start to advise people, may start to advise people on where they can invest. They have a community on Paytm Money where they tell people about how to go about investing. Along with that, we are seeing more aggregation happening. Earlier, fintechs used to think that maybe aggregation they can add value, but finance is something where people don't have a lot of awareness on. So platforms like Policy Bazaar has done is they have enlisted policies of as many insurance providers as possible. Bank Bazaar has enlisted all the available from different banks, and they help their consumers this what they want to buy, and then they can consumers can buy in a single click through these platforms. So moving towards a super app and platformization structure. And there is a very fast growing investor ecosystem. I've had PE and VCs for fintechs, but if you see, a lot of HNIs are coming and participating angel investors for a lot of fintech firms, which is again a big trend from the supply side. There are people who are willing to fund these players, which only enables them to deliver their services in the best manner possible. Now, if you see what are the business models for fintech players, usually in the payment landscape, there are vendor or supplier induced charges. So if you see, I all MasterCard and Visa, they used to charge 2% for any payment that is done through their portal or their POS machine. So these payment service providers, they have bought concept and they charge anywhere between 1 and 2% from the vendor or from the seller. When a buyer purchases a goods or a good or a service from any of these vendors, then in lending you have net interest margin. Like banks, banks borrow at 6%, lend 10%. So you have that 3% margin. And similarly for all the digital lending platforms, they borrow 10%, 11%, 12%, and they lend at 15, 16, 17, 18%. The well tech platforms, you have AUM based or advisory or transaction based cost. Short tech platforms, you have transaction based cost. If you buy an insurance, you would pay a fee of some X rupees for buying that insurance. Then for aggregators like Policy Bazaar model, that users can read and get better awareness about different products and services by different traditional players, and then they can go ahead and choose to execute their transaction through the aggregators. And then there is a reg tech which is emerging. For example, ClearTax is one of them. You navigate through your regulations. So that is more of an activity or project based work. That say if they get you your net worth certificate, they would charge you some XP. If they get you file your taxes, they would charge some XP. So it's more of an activity or project based pricing that they have. Now, going ahead from today, why would fintech continue to grow for the next 4-5 years, for the next foreseeable future? So there are both demand side and supply side factors which impact this. On demand side factors, you would see there are more and more number of people who are having a smartphone in their hands. which would drive more people spending their time online. The internet prices right now, everyone has everyone who wants to spend time on internet has a Jio SIM, and Vodafone and Airtel have also matched their prices to a large extent with Jio. So those internet prices and penetration of increasing penetration of internet connectivity in rural areas, in tier 3, tier 4 cities, tier 1, 2 towns, all of this is enabling people to spend not be concerned about spending their time online. Otherwise, earlier, like 10 years back, we used to think twice before even sending an SMS. But today, you don't have to think about it. Then there's very high cost of delivery for financial services. There are a lot of regulations which you need to comply with, and these firms, they are able to deliver services at a very low unit cost, which is again it reflects in the pricing what they do with their consumers, which is driving demand for fintech in India. And if you see, a lot of people have become comfortable with using fintech platforms. You don't mind like sending money to any, let's say you go to a restaurant, you don't mind paying via Paytm. And so that branding or that acceptance has reached that inflection point that people don't think twice before doing a digital transaction, which is again a demand side driver, and it drives repeat usage of digital transactions. Now on the supply side, you would see a lot of players, especially Paytm, have been very active in introducing their own offline channel. If you go to any petrol pump, if you go to any restaurant, you would see a Paytm QR or a UPI QR where you can just scan that code and transfer that money. So people like these fintech platforms have been introducing with their omni-channel presence. They have been trying to improve physical coverage along with a digital delivery model, which enables more and more transactions through online channels. Then there is again rich data, which leads to better decision making, better risk assessment, which enables delivery of personalized services. And there is improving affordability of infrastructure like cloud services. There are a lot of no-code solutions which have come up on board for people who don't know coding, but if they want to build a fintech or any kind of a platform, it's very easy for any new player to come in and offer their services. But not every, you have to differentiate your services, or you have to solve a pain point for your users. But starting a new setup has become very easy now. Instead of taking 3 months, within 15 days, within 1 month, using these no-code tools to help and offer your fintech services to any user in India. So yeah, that is it from my side. Any questions are welcome, and I'll try to address them in the best manner.
Thank you, Govinda. I think as of now, questions are not there on the chat box. I appeal to all the participants. If you have any query, questions, please post it. In fact, still you can post it towards the end when we take up the panel discussion. Again, Govinda will be available, and he would be more than happy to answer such questions. So any questions for Mr. Govinda, you can put in the chat. Thank you, Mr. Govinda. So nice of you. Thank you.
Thank you, sir.
Thank you, sir, for conveying the sheer width and depth of financial facilitation that fintech is addressing and transforming. It was mind-boggling to understand the landscape. Now, I request Danya to introduce Mr. Dayesh Angle.
Thank you, Pranamya. Our next panelist is Mr. Dayesh Angle, a senior finance leader with over 22 years of all-round finance experience in leadership roles in MNC IT services and manufacturing. He has done a gamut of roles across the finance function, including financial planning and analysis, treasury, pricing, budgets and forecasts, etc., contributing to his rich experience. Mr. Dayesh is a CFO Next 100 awardee, an honor bestowed by CFO India in recognition to his contribution to the field of finance. He is currently the Director of Finance with Capita, one of the largest IT companies in UK, and heads the finance function for Capita Software's India Digital Development Center. In his previous role with IBM India, Mr. Daish was the CFO for its infrastructure service business for India and South Asia region and has served as its treasurer prior to that. Besides spending considerable time in IBM, his earliest stints have been with leading organizations such as Mahindra Hinode, Aptara Corporations, and Tata Finance. We are very grateful to Mr. Dayesh for accepting our invitation and marking his presence here. Now I request Sir to render the presentation on the topic, Digital CFO Embracing the Digital. Over to you, Sir.
Thank you, Danya, for the kind introduction. A very good morning to all the participants for this FinTech seminar. First of all, I would like to thank the CMS Business School for inviting me for such a large event. I come actually from a company which specializes in digital technology, and especially for financial applications, because in the UK, we cater to large customer base across the financial sector, the insurance, the payment, and the investment markets. But having said this, what I would like to bring to the table today is essentially how fintech is driving the finance function. Right, all the time we talk of fintech being a consumer-facing function, how it benefits us all as customers or consumers, and how we consume fintech for our day-to-day needs. But I'm going to talk more in terms of how a CFO views this as a great tool to drive business. So allow me to share with you a small presentation which I've specifically prepared, and will give a little idea of how finance is absorbing fintech, what's driving fintech in the organizations today, and what are the careers that will come for the finance function in the near future. Allow me to share my presentation.
Sure, sir. You can do. You can share, sir.
Are you able to see my presentation?
No, not yet. Not yet.
Okay.
Sir, did you prompt share the screen?
Oh, yes, I've done share the screen option.
It to come, sir. It to come.
Is it visible now?
Not yet, sir. Not yet. Yeah, now I think. Yeah.
Okay, thank you.
It's visible, sir. Thank you. Thank you.
Yes, I will talk about a topic, the digital CFO and embracing the digital, right? One is, how is digital becoming the future of the finance function? And I will just start with this quote from Charles Darwin. It is not the strongest of the species that survive, nor the ones that are the most intelligent. The species that survive.
मम्मी इसका सीरियल लगा दो. क्या देख रही हो अब?
Yeah, thank you. So this is applicable so much even today. If you look at the recent pandemic situation, it's completely accelerated the push towards the digital infrastructure due to surge in remote work and virtual business models in a very complex and dynamic environment. What's become critical now, therefore, is the ability to adapt quickly to supply chain disruptions, time to market pressures, and the rapid changes around us in terms of consumers, technology, competition, regulations. And therefore, the finance function has no choice but to go digital because it sees an inevitable disruption ahead in front of it. But just taking a step back is to say, what are digital enterprises in today's world? So these are enterprises that see these sweeping changes happening around them, and they evolve to serve the customers better. These are organizations which integrate digital technology in all its business aspects to try to deliver value to its customers. They're able to differentiate themselves in terms of their ability to process humongous amount of data whether it's to do with the customers or markets or financials, etc. Because data is all pervasive today, right? It's called as the new oil. And then provide very powerful and insightful analysis to aid actions and decision making and to help the organizations deliver superior business performance. So what is the difference? These are organizations that capture, process, and consume data, and how they link this way to serve the customers. So, and this I said, going back to what Charles Darwin said, it's going to be essential for their survival, right? The excellence comes later, but for pure survival, the organizations will need to turn digital. And therefore, organizations are realizing now the power of data, an explosion in the volumes of data, requiring both focus and new capabilities. A CFO is now called as a steward of the digital enterprise. You know, he was always a data steward because, as I said, data is the new oil engine, and CFO's primary responsibility is to provide data as a single source of truth. He is supposed to provide unadulterated data, which is completely authenticated, and that's why the credibility of the finance function also comes in place. But now this is becoming the digital value steward. The definition of the CFO's role is really changing. The CFO is now expected to provide measurable outcomes by delivering real-time insights into performance, to predict business outcomes, and identifying opportunities using digital to pursue future value. Is required now to evaluate and prioritize investments in digitization of the enterprise. So this doesn't restrict himself to only the finance function. Use the digital tools to harness data and unleash value, and we have a very clear vision and strategy for the finance function in the digital world. And therefore, this is a dramatic shift that is seen in the CFO's function from driving only value to building the digital enterprise. From a dimensions perspective, there are some of the new dimensions which are getting added to a CFO's profile. One, becoming a part of strategic leadership to enable the businesses to take proactive and agile decisions, given that CFOs have deep insights into the economics of the business. I'm sure you're aware the kind of data insights which a finance function has across enterprise, no other function in the enterprise has. Doing a data-driven value creation. So all the value creation activities are being driven by data, which allows the finance function to access real-time insights and allowing for more efficient decision making. Digital labor. Now, this is an entirely new ball game for all of us. You're creating a new category called digital labor, which means the finance function will have to be digitally educated to use the technologies. A cross-functional collaboration, enabling real-time collaboration between virtual teams using increased connectivity and new technologies. And why this is coming in for? Because finance function was always known to be a backseat function where people did a lot of work in the background, but never came in front to deliver the insights. That is completely changing. And lastly, but not only, cybersecurity. Because now that increasing data is going digital, there's increasing threat also coming in the form of cybersecurity risks. And therefore, it is also CFO's role now to ensure that cybersecurity is embedded in the decision-making process by going digital. Now, how does CFO embrace the digital world? One is obviously to significantly enhance and accelerate the adoption of the technology in finance, and choose the technologies that meet the 4 Ds. This is the way I would like to put it: disruptive, deceptive, delocalized, and democratized. Disruptive means the technologies that have the capability to completely overturn the existing business models. Next is the deceptive part, which means they can give us surprises. I'm saying positive surprises. Delocalized means they are mobile, not restricted to a particular area or particular area of work. And democratized, technologies that can be accessed from all parts of the world, not from a particular source. And therefore, these technologies that are being used now are to do with cognitive computing, financial intelligence, and automation. These are going to get used to collect, analyze, and exploit the ever-increasing complex and volumetric data to expedite decision making. What are the key outcomes that are going to be achieved by digital finance? Of course, digital finance brings to you speed, agility, a real-time environment and flexibility using platforms, processes, automation, and analytics. Platforms are the typical systems that will have to be used in the backend, which store all the data and provide you layers for better data quality, better insights, and more control. Processes which lay the path for a digital roadmap, and services to provide superior experiences in agile operations. Automation, where this is getting combined with advanced technologies to deliver efficient and intelligent processes. And lastly, analytics, which have models to deliver real-time insights. So which are the key functions which get impacted with this? Budgets and forecasts, integrated and collaborative processes, dynamic analytical models, decision making, and business planning. So this is how the key CFO's digital function is going to look like in the future, right? There'll be 4 digital technologies that will reshape the finance function: automation and robotics, which will help us improve the processes; data visualization to give end users a real-time financial information. And this is the real kick, right? Because earlier data was shared in the form of Excel sheets and Word documents and PowerPoints. But today, the key is to visualize data in a form that allows quick and agile decision making in form of generation of dashboards and graphics, which can be tailored and flexible enough to meet internal needs. And and people can slice and dice all kinds of financial reports that help in decision making. Advanced analytics will be a step ahead to accelerate the decision support, which can help you to conduct all kinds of analysis. And I'm differentiating between analysis and analytics here, right? Analysis is typically something which you do with the past data, but analytics is using the future past data to predict something in the future, which can enable decision making. And lastly, analytics for business, not just for the finance function, which can help to uncover a lot of hidden relationships between multiple parts of business. Today, we find a business has got multiple parts which are supposedly not interlinked, but analytics are going to help you join different parts of the business and allow superior decision making that enhances your value. A quick look at how the FP&A function is going to look like for finance. One, it will provide real-time analysis using external and internal databases. It will provide increased accountability to achieve corporate goals. It will allow optimized IT resources and infra, and it will, in the end, help you improve the business performance. Now comes the real part, right? We can all think of using these applications, but you need somebody who knows how to use these applications and who can understand this better than students of finance or somebody who has learned finance, right? But the student of finance who has got a subject matter knowledge will have to go a step forward. What's going to happen is a lot of transactional tasks are going to get automated or are already getting automated. For example, the order to cash part, the procure to pay part, accounting, transactionals, these are all getting automated, which means you are using robotics also to automate these functions, which were typically or traditionally done by the finance teams. Now that a lot of this work is going away from the finance team, there has always been some insecurity feeling, oh, our jobs are going away. But no, I would look at it very differently. Because of this automation happening, new jobs are getting created for the finance function, because finance teams are now getting free to provide a lot of value-added analysis that can boost the decision making across functions. But this will mean you will have to specialize in certain key areas like predictive analysis, scenario tracking, and real-time influence in business performance. So some of the key new roles which are emerging are that of a data scientist, a scenario planner, and an AI or a trend strategist. And mind me, these are all finance functions. These are not technology roles anymore. These are finance roles which are coming up. A little bit more overview of what these roles really do. Yes, these roles will need to understand the digital technologies. For example, a data scientist role will need to know something about tools like an SQL language or a Python or a Power BI, how to use it. Similarly, with a scenario planner as well as AI trend strategist. But yes, there will be certain new skills that they will have to learn, which means you have to take the extra step to excel and survive in this finance function. In addition to these skills, you will also need to have very strong customer service orientation, flexibility, and good collaboration skills. Why? Because you are now going to influence the entire organization using digital finance technologies. Some of the technologies that are going to get used: foundation systems, planning and reporting engines, visualization and dashboarding tools, advanced analytics. There are multiple technologies available in the market today, which I think all of us can, look forward to, spend some time to learn these technologies. In conclusion, digital finance will require digital technologies and digital technologies finance talent going forward. One, it will be the ability to transform the finance function with improved planning and decision making. This offers CFOs a new way to deliver real-time financial insights in which are required in today's complex environment. Digital technologies will bring in a lot of science to decision making. So it's no longer ad hoc or hunch based decision making, because they are now going to use superior analytics to make predictions and recommending customer facing actions to maximize business value. And therefore, the most agile customer centric companies which will win in the marketplace, which will place customers at the heart of demand driven dynamic digital world. And yes, even for a finance professional, the customer will be the key. No longer it will be only the internal function that you work with, but it will be the end customer who will work to be the key. And in the end, it will help us meet the ever increasing expectation from the CFO from the CEO and the larger organization. So this is where I would like to conclude my presentation by saying the digital future is now for finance. Thank you so much. Any specific questions that anybody has?
Thank you.
Dr. Rao, you're on mute.
Yeah. Thank you, Dayesh sir. Couple of questions for you. There is a question which reads as follows: what drives automation in finance when you have people to do the job?
I think automation will provide a lot of speed and agility. And unlike humans, I would say automation can be done around the clock, right? And that's exactly the point I was trying to answer. People have that insecurity that their jobs will be lost because of automation. But I would say new jobs are getting created because of automation. Because what is getting automated is that very routine transactional functions. For example, processing of your purchase orders in organization. An organization will probably prepare hundreds of purchase orders on a daily basis. Similarly, following up for accounts receivable, right? An employee will say, okay, somebody's payment is due for last 30 days, send an email to the customer, do chasing. But this all is going to get automated. So you will just get one report which says, okay, these are the outstanding customers who have not been paying, or it gives you analytics to you saying that, oh, there are certain categories of customer who will not be paying on time. So start following up with them right now. So all these routine roles which are transaction oriented will get automated, and the finance professionals will get time to focus on adding value to the business by learning new technologies and giving a lot of analytics to the business to drive value in terms of, okay, you can do a customer analysis, you can do a cost analysis, and see how this can enhance and enable business decision making.
Thank you. I'll take another question. In fact, last question due to paucity of time. It is from my colleague, Professor Firdaus Khan. Her question reads as follows: any new forms of noise in the data, given the sudden pivot to digital?
Yes, data was always available, right? It's just that we did not know how to harness it. But now, as I said at the beginning of the presentation, we have no choice but to harness the data quickly, because it's becoming a question of survival now. The quicker you're able to harness data and convert it into meaningful analytics, that will help organizations to keep a step ahead of its competitors. But data is going to be very, very key in decision making. And that's how finance, because they own the data, if I may say so, will have the cutting edge to drive value by using data analytics.
Thank you, sir. Thank you so much. Sanket and Pranamya, are you there? Sanket, Pranamya. So, Pranamya, you have to unmute and you have to unmute Pranamya. Aram se. Yeah. Okay, sir. Sure. Thank you, Mr. Dayesh. Thank you, sir. Thank you so much.
Hello.
Hello.
Yes, sir. The host muted. Sorry, sir. Yes, thank you. Thank you for your insight, sir.
Yeah.
Now I request Isha to introduce Ms. Surabhi Gowde.
Pranamya, you do it.
Yes, sure.
Yeah.
Ms. Surabhi Gowde is working as Associate Director at Capgemini Invent. After completing her Bachelor of Engineering in Computer Engineering, she finished her MBA Marketing and Finance from Great Lakes Institute of Management. She has completed Executive Education, AI Implications on Business Strategy from MIT Sloan Executive Education and is currently pursuing the LEAD program at Stanford University Graduate School of Business. She has worked in Cognizant Technology Solutions, Kotak Mahindra Bank, Ernst & Young, KPMG, Accenture Consulting, and currently at Capgemini Invent. Her publications include Big Tech is Eating Banks and Fintech, Financial Inclusion in India, Interdependence of Emerging Technology on Next Generation Banking, CRM in Banking, Payments in India, and Overview. Now, I request Surabhi ma'am to render the presentation on the topic FinTech and Embedded Finance. Over to you, ma'am.
Thank you for the great introduction. I'd like to thank all researchers, professors, dignitaries, especially Dr. BRR sir for organizing this very well. It's a well-organized event. Thank you so much.
Thank you. Thank you.
Please let me know once.
Yeah, you
visible.
can please share the screen. Yeah, it is coming up, Surabhi.
Is it visible to you all?
Yeah, it's visible.
Sure. So if I were to talk about fintech, this is the view that what do you think this looks like? It looks like a shopping page, a website where you can shop multiple things. With like clothes and groceries and everything. But this is actually a bank. This is a bank in Sweden. It's a fintech bank. This is what banks look like now. This is very different from the websites that we look at. This is very different from how we look at, imagine banks to be. But this is what a bank looks like now in Europe. It is all about shopping. It is all about transactions. It is all about customer experiences. See, if you see the website, how I would like to draw the point which Harold sir mentioned about the psychological, behavioral, and I think it will be very interesting for all the researchers how we interact with money and what we do with banking. It has changed drastically from going to a branch, opening that account with your parents, has completely changed to something like this, where we talk about experiences. It is just talking about having fun and shopping. This is one of the topmost fintechs in Sweden. Klarna has in fact got huge funding. I think the numbers are boggling all over the place in H1 2021, but this fintech is really doing well and has got its next round of funding. What I would like to focus on things that the students can take away from this sort of experience is how experiences are important right now. it is what is it that is offered to a customer. So if you think you're building skills, for the future in fintech, this is the other aspect of it, the marketing aspect, the user experience aspect. This is how you market to the new customers. It doesn't talk about the products in banking, it doesn't talk about investments, it doesn't talk about anything, but it talks about what the customer wants. You open your app for buying something, for consuming something, for some sort of entertainment. Another thing I would like to highlight is convenience that these fintechs and new age technologies that they offer is convenience, that pay anytime. Like gone are the days when you have to, like, you still have your EMIs and home loans, but credit has drastically changed by this new the advent of the fintech models, and their innovative ways of thinking of deeply thinking about the customer needs, the ability to pay every month, or can they pay in different manners through different platforms. And thirdly, the safety bit of it. So technology enables securing these transactions better. The cloud native is more secure in some manners. Of course, there are gray areas, or sometimes there are attacks, but every fintech wants to be successful, and therefore they care about safety because they have to thrive in a new environment. And I would like to just highlight the point that savings account is like a tiny, it's a bank, but you barely recognize it's a bank. The products have gone in the background. They're almost invisible. You just have this UX which entices you to have, interact more with transactions, improve. So this is how fintechs have been successful. If you in India, there is Google Pay, which and there is Phone Pay that has about 80% of market share on UPI because of the customer experience and the convenience that it offers. You don't have to really deal with a person. It is just seamless. So this is one of the key skills across any of the emerging, fintech, especially for marketing students, technology students who would love to experience, fintech careers or pathways. This is one of the most striking pieces. And you may say, that fintechs, there are multiple fintechs, but if you see any industry like delivery apps or anything, initially there are about 20-30 players, and then there will be only just 2 players who will be at top of your mind, whether they are delivery apps, whether they are fintechs, whether they are any new area. And that is because they are because of the customer experiences and the convenience that they provide. I would like to focus on this part of this feature that fintech offers is pay immediately, later, a little, now and then. So this is democratized credit. Instead of having a debit card or instead of applying to a loan, you are instantly getting, you can buy now and pay later, which is one of the strongest and the most emerging models right now in fintech areas. I chose this. Fintech is across various points. There is RegTech, InsurTech, and all of that. But I've just chosen a use case of lending or a credit. How do you take credit? Like, even if I do not have any credit card requirement, you get the call from a bank for credit cards and you just say no, but you have Ola Money giving you extended credit limits, and you probably take it because it's just easy. It's just a click, rather than you waiting for an OTP or putting in your PIN for the UPI. You just have to just say okay, proceed. So lesser clicks, better experience, and that's how these companies have been building. There is something called Unicards in India, which is getting a virtual credit card in 5 minutes over Android. It's about just credit, and they give you, I'm talking about the risk part of it. let's say they start with smaller amounts, and then seeing the customers' credit risk and appetite to pay back, they increase the limits. So that's how these new products are evolving. Digital products are evolving that are driving their growth. So it's basically the, improved customer lifetime and conversions that they are gaining out of these exceptional customer experiences that they're offering to customers. So this is something banks. Let's say the UPI is the biggest example that we have right in India. It's evolved and far better than the payments that are available in US as well. So it's how you're able to interact with your customers, how deeply involved you are in every aspect and every step and process of that customer experience. Like there can be hundreds of customer segmentations. Earlier we used to have, like 10 years ago, if when I was in a bank, you had certain type of customers, A, B, C, D, the privy customers or wealth customers. But now even a customer who has a very good credit score will still use Ola Money despite not having the need. It's not because they cannot afford or they want credit. It's just because it's just easy, or they want to explore, or it's just the convenience. So this is a brilliant, one of the brilliant use cases in fintech that are still growing, and there's still scope. So credit cards are just a single digit percentage right now in India. The penetration is very low. Whereas you go in the remotest part of India, you will find someone having Google Pay on their phones. So that's Vice Chancellor Sir mentioned about Jan Dhan and mobile penetration, and that has definitely helped us globally and in India as well to for fintech to be able to deliver these experiences to anyone who can download an app. So these are the players that you have. They are democratizing credit all over the place. You have so many players in every continent. Like Klarna is probably in Europe. You have Affirm in US, Hula Atomy in APAC, and they've been it's deep customer focus and ability to deploy these solutions quicker. Like, of course, the banks have money and funds to do all of this, but the agility, the flexibility, and the deep customer focus that these fintech players have made all the difference. If I were to speak about India, we have a few. So HDFC and ICICI banks have also had this flexible paying credit product, but the flexibility of being able to pay back within 14 to 20 days, 30 to 45 days, paying some part of it without having to do any paperwork has blown up the space by a huge amount. So if you notice, like anyone and everyone who can offer that credit is in the space, whether it's Amazon, whether it's a cab sharing fintech, whether it's e-commerce, banks, anyone and everyone who can provide lending. So banking is not just with banks, it is with anyone who can offer those services. So that's one realization that we've come across in last few years, that incumbents can be can face competition. If they don't evolve, they will have to collaborate. They will lose their business. Their existing customers will have buy products with these fintech companies, and hence collaboration is the ideal way, where banks have their legacy systems and ATMs to take care of, and they have these new age native apps as well. So how fintechs can themselves grow or collaborate is the future path for fintech companies. Finally, as I was mentioning, anyone who can offer finance is in this space. So finance is ubiquitous. It's embedded finance that let's say an e-commerce a retailer is adding payment or financing option at checkout, like you have your Amazon, Flipkart, or any e-commerce. So pandemic has definitely given a boom to these these sort of models. They existed before the pandemic, but not so much. Now that we're staying at home, we get everything ordered online. We can order it. You have e-wallet companies, you have the gig economy, where there are platforms that are created for the consumers and the providers of any sort of services, any sort of experiences. And I think this is what is driving the core of the embedded finance is there are banks that are open to give their APIs, and then there are companies that are willing to give banking services. So when you technologically merge it, there are these APIs which make this possible, where we call banking as a service. You embed finance in any company, whether let's say Dr. Reddy's has a supply chain financing offered to its vendors. It's a pharma company, but it is taking away a pie by offering certain financial products that are benefiting them. And to drive to Dayesh's point, it definitely helps a CFO to better understand the cash flows when you have more control over your payments, over your working capitals. When you have that control over your own finance. So open banking is something that's it's regulatory in UK, that all banks they can share data with third party with consent from customers. So it brings all the banking data to non-banking companies, which is wealth of data that all companies can work on, right? Like there are different, let's say ICICI uses satellite data to determine lending products for agricultural sector. It's a very innovative use case, and there are a lot of banks who use various types of data and data analytics to figure how they can cater to their customers. And you also have companies that want to give banking functionality to their own customers without being a bank. There is no license that is required. They just have to use the fintech APIs. And this has kind of disrupted the whole scenarios where you see 5x increase in revenue per customer with embedded finance. So the whole point of having a fintech company or startup is not only have the acquisition cost, it is the customer lifetime value and the ability to get a payback from the investments that are done. So the ability to get paybacks, to ability to move towards profitability is the way of maturing and scaling up for fintech companies. So being ubiquitous across the ecosystem is the latest trend for fintech company, and this is the embedded finance that we talk about. It lets any company become a banking services provider. And so when we talk about fintech, we know that some fintechs provide lending, some of them provide cards, and various. They are unbundling banks in parts and pieces. So what happens to these fintechs in future? What is the model that they should follow in future? Do they do all of them survive? Do are all of them successful? How do they scale up? So being able to provide more services is one of the ways that they grow vertically. Like these are let's say various fintechs that are present across various banking services. You have Stripe, you have Cabbage lending, doing the mid desk. So the ones on the top are the ones who resell a product from a bank. They tell a bank that we will help you sell better. We will find new customers for you, new customers to the bank. You can include them in your payment ecosystem. You can give them loans, and there is a fee to it. That there are various. So they resell their products. So the trend from reselling it, just open bank, using the open banking model, to embedding it providing the entire banking as a service, being the open finance, is the growth trend for fintechs or the next graduation level. Like we have MFIs in India that grew into small finance banks. For fintechs, it is either becoming a bank, collaborating, or becoming this entire a platform that provides end-to-end customer acquisitions, products, the risk part of it, all of that.
So, here. Sorry to intervene.
Sure.
Yeah, please. So time is the issue. Please.
Okay, sorry. I'll go.
Sorry to intervene. Thank you.
No. So the benefits of this sort of model is you have more control over payments processes, the value add for customers, and higher revenue for the fintechs to grow in future. And so we see like Toast, for example, owns the loans that they're not just selling the loans, and they see end-to-end support and recovery of those loans, for example. Next is the graduation from open banking to open finance, right from APIs up to third-party access, insight-driven, so data that is driven for the right services, facilitating and exchange across the entire ecosystem. It runs across sectors. Right? Banking is about lending to every sector, so that's what fintech has been doing, and that's the monetization opportunity that lies. So this is a small example where a bank has focused on the small medium businesses. It's an underserved or overcharged sector, and they have built various features like payments reconciliation, smarter invoicing, simplified expenses, bookkeeping. This is something what a small business wants support in. It's not about loans. It is about how you help your customers drive their own businesses. And this is where you see embedded finance, growing further into account aggregation, maybe treasury, leveraging that sort of data, smart FX hedging, helping your customers grow their businesses. And the European B2B startups have higher capital efficiency than the ones in US as per latest McKinsey data. So how B2B businesses are looked at by fintech is another great area. I'll just quickly run through this. These are the latest, H1 2021 has been the biggest historic for in valuations for fintechs with 67 billion, and it's the same, simple features, emerging technologies, touchless payments that's driving this. This is a new area. One of the last topics is multiverse. Facebook calls itself multiverse. A lot of gaming and virtual products are up. There are virtual communities. There is NFTs. We would expect AR, VR payments and augmented finance in the space of how people interact. Netflix is coming up with gaming, how people interact with various platforms, and how gamification and finance would evolve with this would be an interesting space to see in future. I would like to wrap up with a summary of what's next is 3 key takeaways. First one is customer experiences, micro customer segmentation, and simple UX that is definitely driving the fintech space. They are bringing in convenience. Every company is a fintech company. It is not restricted to banks or fintechs. Anyone that who can collaborate or build new models is into embedded finance. And next is augmented finance, interactive spaces, metaverse. The evolution of matured fintech into diversification, monetization, and scaling beyond their core markets. I think that's the future for both fintechs and banking. Whoever is able to thrive and offer unique, innovative solutions would be successful. That's it.
Okay.
Thank you, ma'am, for your insights. Dr. Vyara, sir, any questions from the participants?
Okay. Thank you, Ms. Surabhi, for helping us. As far as the questions are concerned, we are running behind the schedule. So therefore, we will take all the questions towards the end. And I appeal to the other experts to do it within 5 to 7 minutes. My request, humble request. So please keep in mind the time. Thank you. And we will take the questions when we take up the panel discussion. Thank you.
Now, I request Chandan to introduce Mr. Raghavendra Prasad.
Thank you, Pranamya. Mr. Raghavendra Prasad is an accomplished digital transformation and data analytics leader with 15 years of experience, currently leading the Risk Intelligence and Business Resiliency Uplift programs for Asset and Wealth Management Division of JP Morgan, based out of Bengaluru. He has been instrumental in building the digital transformation and data analytics practice for the Risk and Controls Department of Asset and Wealth Management Division of JP Morgan. He holds an engineering degree from MS Ramaiah Institute of Technology and has worked with ITC Infotech, IBM, Goldman Sachs, and Honeywell in various capacities. He is passionate about emerging technologies, data science, intelligent automation, and analytics. He is also an avid cook and traveler. He worked as a volunteer in an NGO, Youth for Seva, and was involved in teaching the underprivileged kids. He lives in Bengaluru with his father, wife, and 2 kids and speaks 5 regional languages. Now, I request Raghavendra sir to render the presentation on the topic Driving Controls and Resiliency in Banking and Finance in the Times of Crisis. Over to you, sir.
Thanks, Chandan. Thanks for that introduction. Let me start sharing my screen. Let me know once you can see it.
Yeah, it is coming up. Yes, sir. It is ready now.
Okay. Okay. So thanks to the CMS Business School, Biara sir, and the whole students actually to be part of such innovative and industry relevant topics in terms of where to go from a banking or from a finance side. Before we move into the main parts, I know we have been talking a lot about digital, but there's a certain nuance from going digital to digitizing something. When we say we are digitizing something, it could be your record keeping, it could be your bookkeeping, it could be an NBFC, it could be a small society, it could be even a bank. Going digital is completely different from digitizing your record keeping or your forms or any of those kind of processes that the banks or NBFCs currently have. Going digital is all about how do you expand your mediums in terms of how do you reach out to your customers, how do you increase your revenue share, how you are out there in the market competing with some of the fintechs. I know a lot of speakers have been talking about fintech a lot, but banks are also catching up. I'm more from the banking side, so I'll be a little bit pro on the banking. So we'll take the debate later in the panel discussion. So I don't think banks are gonna go away anytime soon. If you take any fintech companies, right, the backbone for any kind of money transaction is pretty much gonna be a bank. So for us to get that element out of the picture for fintech, it might take a little more time, and banks are also rapidly evolving to catch up with the fintech pace also. So that being said, when we understand the core difference between going digital versus digitizing something, that the process that's currently being done in any organization, that's key for us from a journey standpoint. Okay. So everyone's been talking about digital transformation. So in the pre-pandemic era, digital transformation predominantly was more of a choice for the organizations, wherein they were looking at it more from an efficiency standpoint, more from a productivity standpoint, more in terms of how do you do more with less. When we say from a choice standpoint, they were looking at processes that could be digitized. When I say digitized, how can you make a process efficient? How can we use some of the digital transformation tools out there and make it more simple, make it more error-free? How do we make it more non-dependent on an employee in an organization so that the employees could focus on something much better, which is a value add? A lot of people have been saying from an automation standpoint, automation is something wherein you can take a process which is done 1, 2, 3, and if it's the same process or the same steps which is done in a process, you pretty much can automate it with some of the automation tools out there so that you give employee a time to focus on more value-added work, given that regular repetitive work is being automated. What you see here is more like, if you call as a wheel for digital transformation, and the different spokes being, you can take data analytics. That's one of the key or the first thing that comes into mind once you digitize your assets in the organization. Cyber security, you need to safeguard your assets. You need to have a good place wherein you can safely and securely store and do your processing. That's cloud computing. You should be able to integrate across all your different systems, take it your banking, your retail, your investment, your assets and wealth management. You should be able to seamlessly integrate your data and your processes. And once you have integrated, how do you have different machines or different systems talk to each other? Once you have done that, then you get into more interesting things like Internet of Things, which is predominantly of your bots, your artificial intelligence, your advanced robotics. 3D printing is not relevant much from a banking standpoint, but in a manufacturing industry, definitely yes. So like I said, it was a choice, but with the pandemic coming in and the business models itself changing across the board for every organization, organizations which have been able to adapt and transform have survived. And if you look at a lot of traditional organizations which haven't been digital, pretty much have waned away in the pandemic in the last 18 or 20 months. So that's why we say digital transformation, which was a choice back then for the organization in the pre-pandemic era, it's now a necessity. And my colleague Sadashiv will cover or talk more from a necessity standpoint of digital transformation in the finance world also. Moving now, when we say digital transformation, right, the first thing that comes into mind is how do you go about the digital transformation? There are three key pillars that I would like to highlight. One is you need to digitize your process. You need to upskill or reskill your people, and you need to have a robust technology which can support both your processes and your people. So that's where a concept of you need to reimagine your processes. You need to reimagine as to how your people will work with the processes. And you need a strong technology wherein you need to re-engineer the same process so that you can cater to the world in terms of your digital transformed products and service offerings. If you look at most of the fintech kind of service offerings that's coming in, it's predominantly being on the re-engineer side and reimagine side. Take it credit, for example, right? The way we make payments through credit cards, it's been completely revolutionized. I would say at least it has been a boon for a lot of people who miss their credit card payments, who don't have one single stop of consolidating all their credit cards. So if people are juggling with multiple credit cards, it gives a platform wherein you can consolidate all your credit cards in one, and it helps you tracking with your expenses, your purchase behavior. It even rewards you for making payments. That's pretty much a cool thing, right? So when you make a payment, you get some kind of a cash back. That's money bank in the bank, actually. So that's a very good model. And that's how you have to reimagine and re-engineer with some of the things that have been happening in the industry with pandemic setting in and with the trend that we have been seeing across the board. It might not end anytime soon, even with the vaccinated countries also. So it's here to stay. And it's for organizations to focus on these three key pillars. How do you look at your processes in the new way? How do you ensure your people are up to it in terms of adapting to the new processes? And how do you scale up your technology also? Because with everything moving on to the cloud and digitizing, there are a lot of instances of cyber attacks being witnessed across the board. It's not just with any big bank, take it any small bank also, or even any fintech. Cyber attacks are something which cannot be ignored. So that's where technology is a key portion that every organization is to look at from a digital transformation landscape, which is pretty much the backbone for every organization. And in terms of, we have been talking about transformation, but we have to look at what are some of the potential impacts also from a transformation standpoint that we need to keep in mind when we try to move towards a digital kind of an ecosystem. First, if you are a traditional bank or even an NBFC, the first thing that you need to keep in mind is you are getting all your regulatory kind of checks in place just to ensure you don't have SEBI or SEC coming knocking on your door. You have this going on. Where are your controls? Where are your resiliency, or where are your risks being captured? How are you mitigating it? Just to give a simple example, last year, Citibank had close to a $900 million hit, which is a public news right now, due to a transaction which was done from Citi to a company called Revlon, even though it was a human error, but there were a lot of multiple checks and balances in place before money goes out from a bank to a third party. In spite of all the controls and risks also being put in place, that transaction still went through, which didn't go well with the regulator likewise. So we have to ensure from a regulatory standpoint, any process you try to digitize, any new product that you try to get out in the market, it meets a regulator's requirement. And next, from an impact standpoint, straightforward monetary impact. Like I said, Citi was a classic case of getting a monetary hit, which was $900 million. Regulators had come knocking at their doors, and their reputation also took a hit. So every time we look at transformation or rolling out any kind of digitized products, these three things are pretty much the key things that one have to keep in mind to ensure any kind of transformation doesn't go on the wrong path. And in terms of some of the transformation levers that we have had in JP Morgan that I can talk from a personal standpoint is, in the pre-pandemic era, JP Morgan had a total assets under its management was roughly around $2.7 trillion. It took JP Morgan close to 100 years to get the first $1 trillion, another 30 years to hit the second $1 trillion. It took 7 years to hit pretty much the third $1 trillion, and it took 13 months to take $4 trillion. So if you look at the gap, that's been reducing so significantly from how fast the bank has been growing in terms of assets under management. And if you look at the pandemic times, that's where, based on some of the digital transformation efforts that the bank has been able to put through, take it from a business standpoint, take it from a technology standpoint, has given massive rewards right in dollar to the bank, wherein we have made more money than any time in the last 100 to 120 years of our existence. So last year alone, we had $119 billion in revenue, which predominantly looked at 32 billions in net profit for the bank, which is the biggest by far for us from a banking standpoint. And some of the business enablers that have been helpful for us in terms of pandemic times and the crisis that we went through from a US standpoint, wherein we had Black Lives Matter and a lot of other civil unrest also going on in the US, a lot of branches had to be closed, which meant your traditional asset management, wherein you sit down with an advisor, tell to him your use case in terms of what do you need the investment for, what are you looking, what are the risk returns. It was pretty much a personal relationship that you would sit down with a personal banker and discuss. It's not your retail banking, it's more in terms of your asset and wealth being managed by a bank. That was a face-to-face kind of a conversation, predominantly in any bank. That had to be reimagined given pandemic was going on. We had more like branches being vandalized. We had branches being closed down due to a lot of civil unrest issues. So that gave us an opportunity to look at innovative solutions wherein we have the physical conversation with the personal banker in place, but moving all your processes right from signing a paperwork for your loans, for your investments, everything was online. We ended up leveraging some of the tools like eFax, SmartMail, Movius, DocuSign, and last but not the least, Zoom was a boon for us from a banking standpoint. That being said, from a business standpoint, when you look at technology enablers, we had some of the common tools from an analytics automation standpoint that has been a savior, wherein we ended up saving tons of hours from a productivity or operational efficiency, wherein we used automation anywhere, UiPath, business decision tools like Signavio, wherein a lot of your traditional decision making moved online. So it wasn't a human-driven decision, it was a tool making a decision whether a loan should be disbursed or whether a customer should be taken on board or not. So that revolutionized a lot of our decision making. And from an analytics standpoint and advanced analytics, Python, Tableau, Ultrix, and from a storage standpoint, your big data tools like your AWS and Hadoop have been a big player for us in our digital transformation journey. Having said that, we expect our digital transformation journey to get even better this year and next year, wherein we have a lot of projects that's currently in flight in terms of making our bank even more digital. We are trying to get some of the processes getting automated wherever possible, because few processes do have some kind of subjectivity involved from a decision making standpoint. Wherever it's more objective driven, that's being completely digitized. So having said that, the future is going to be more digital. Like I said, first have a foundation for your digitization done from an asset standpoint. Take it your forms, take it your signatures. Once you have that data, next it's all about how do you leverage that data to grow your business and rapidly transform your business also. That being said, I'm happy to take any questions.
Thank you, Raghavendra sir. Thank you so much for your insightful presentation. So as we are running behind the schedule, we'll take the questions towards the end. Thank you.
Sure, thank you.
For panel discussion, okay, we will take up the questions. Over to MCs.
Yes, thank you, sir, for your insights. Now I request Anchala to introduce Mr. Sadashiv K. Vasista.
Thank you, Sanket. It's my honor to introduce Mr. Sadashiv K. Vasista, who is currently the Director, Business Analytics at Honeywell. He has over 12 years of experience in driving analytics engagements across digital and functional transformation. He has worked at HP prior to his current company, Honeywell. During his time at HP, he was managing a profile of more than $500 million and led the pricing deployment and FPA and functions. In his current role, he serves as a data analytics leader, managing the predictive analytics engine across Honeywell. He was a recipient of Premier Achievement Award at Honeywell and entry into Hall of Fame, People Who Made the Difference at HP, both are company's highest honor. Mr. Sadashiv K. Vasista is a qualified cost and management accountant, a Lean Six Sigma black belt, and a proud alumnus of Jain Institution. A warm and hearty welcome to you, sir. Now I request Sadashiv sir to render the presentation on the topic driving operational efficiency through enterprise digital transformation. Over to you, sir.
Thank you, Angela. Thank you all. Can anyone confirm that they can see my screen?
Yes, Sadashiv, you can go ahead.
All right. Yeah, thank you, sir. So first of all, big thanks to the dignitaries, the research scholars, and fellow academicians for having me here. So I know there's paucity of time, so I'll quickly get started. So what I'm going to do now is I'm kind of going to summarize most of what the speakers have already mentioned. But what I'm also going to add a layer down now is to try and see how the students, how the participants can try and connect the dots as far as digital dexterity and digital transformation is concerned. So I'll try to give as many case examples and as many live, I would say, demos possible, right? So quickly moving on to my next slide. Basically, what this does is I'll take you all back to about 10, 15 years, guys, right? So back then, if anyone were to ask, like, what is it that your child or anyone would want to become, the normal answer that parents used to give was, my son or my daughter wants to become a doctor, astronaut, pilot, etc. Trust me, the space of digital transformation was not there before. And now it's the now normal. So it's so imperative that we better know what is digital and we try to imbibe that. And let me also give you some examples of what's happening in the industry so that you can correlate very well to your studies as well. To talk about healthcare sector, I was talking to one of the professors, the ex-professors of Stanford University. So he was telling me that they are coming up with some digital predictive analytics in healthcare, which tells you that if you just walk down, just by scanning your body, it will tell you the number of cancerous cells in your body. Yeah, and it will also predict based on your metabolism rate whether you're prone to cancer and can try proactively providing you some medications. Okay, so that's from a healthcare sector. If I were to give you another example of customer experience or maybe call center, right? So I know all of us were extremely hit by COVID last year. So customers kept on calling companies. So again, technology came into picture, digital transformation came into picture. And what they did was they introduced something called as conversational artificial intelligence. So don't get worried about this wonderful terminology. It's nothing but a bot answering on behalf of you. So a bot knows how to modulate your voice. A bot knows where to go to SAP to pick the order number. Everything is digitized. So I know this is more fintech, so let me now give you finance examples before you get bored, right? So talking about finance, other speakers have clearly told that there is multiple reporting opportunities, there's multiple I would say bot opportunities, etc. One thing that I would want to stress is current I would say market prefers real-time, in-time reporting. And what I mean by that is hitherto this multiple companies do month-end reporting, quarter-end reporting, annual reporting. But trust me, team, the CEOs, the CFOs, they are not going to wait for the end of the month. Like as Dayesh rightly mentioned, so what we need to do is, and what you may have to make note of is, the CEOs, the CFOs, and the CMOs for that matter, they prefer real-time analytics or real-time reporting. And that is possible in finance through enablement of technology. So in summary, for this particular slide, my big takeaway here is we develop wonderful tools, but let's be careful. And that when we talk about artificial intelligence, one takeaway for all of us here is we have to be less artificial and more intelligent when we develop such tools. Okay. So with that note, let me try to give you some actual examples of fintech, or I would call it as case study. And these are actual examples. I've kind of masked the company details and indicative benefits. I know, we're running short of time, so I'll kind of summarize it by giving a couple examples. The one on the top left, it's called as inflation analytics. I'm sure most of you are aware of all of you are aware of what inflation is, right? So these are the examples that are carried out across multiple companies. And essentially what they do is they've leveraged finance and technology. So I would call it as digital and transformation. It's not just digitizing it, it's executing it as well. So talking about inflation analytics, this company was severely hit by soaring inflation, right? So essentially what this company did was it went to it sourced the information from IHS Global, and you can also go to Bloomberg.com, etc., to get the commodity-wise inflation. It could be gold, copper, aluminium, etc. And then what it did was it just tried to correlate that to the bill of material that the company has. Okay, so let's say gold was increasing by 10%, but apparently this company was paying 20% for suppliers. And all that this company did was, look, this is what the market is saying. This is how much you are charging. Where is the correlation? So basically what the company tried to do is it just did not digitize the entire portfolio of data extraction from IHS Global or anything of that sort. It also tried to marry the fact that, yes, there are a decision being made saying that there is increase, but the increase is substantial. So supplier, let's meet at a common point. Let's converge at a common point. That's one of the, I would say, booming example that multiple companies are already following. And it's a Fortune 50 company. Another wonderful example in finance towards the top right is an account receivable forecast. So someone spoke about credits and collections being automated. I agree. I wholeheartedly agree to it. So at the advent of technology here is, now what is account receivable? It's nothing but you sell something, a customer has to pay you some money, and if that customer does not pay, he or she is considered to be past due, right? And team, you need to also understand that many companies, be it Google, Amazon, you name the company, they have a dedicated credits and collections team, and who know nothing but calling the customers and telling them that, look, you've not paid, pay me back. Just imagine the cost, the labor cost, the opportunity cost lost, times of following up, etc. So all these were embedded into an intelligent automation solution, which says that based on the customer pattern, let's say a customer perpetually paid 5 days late, okay, and there's another customer who always pays in time, right? So what this intelligent automation said was, you know what, this customer always pays late. Let's further reduce the payment terms, so that he understands the impact. Subsequently, the other customer, he always pays in time. Let's introduce a 1% discount. And trust me, team, these are all factual figures. Because of this change and because of this automation, intelligent automation, essentially what happened is customer satisfaction improved. Customers are now seeing that, okay, if I pay early to this particular company, I'm going to get a discount. So let me do that. And just imagine if you were to be a company and if supplier or some customer were to pay you early, wouldn't you want it? It's money in the bank. Why would you say no to it, right? And maybe if I have another minute or so, I'd like to hit on one more example here. Inventory optimization. All of you would have studied about it, right? So we all know inventory is a balance sheet class. We have assets and liabilities, and we have inventory as part of assets, which is all good. But many companies, I'm saying this, many Fortune 50, Fortune 100 companies, they want to reduce inventory. So you may be surprised, like why should an asset be reduced? One thing you need to understand is when you have inventory, your cash is locked. You cannot go to the grocery store and say, you know what, take this item, give me back some money. No, they need money. So essentially what's happening is this particular company had tons and tons of inventory. And all that it did was it tried to understand what's the financial landscape around what's the orders, what's the current gross inventory, etc. And it developed a very small automation tool. Essentially what it does was it tells you that whenever you have an inventory placed or a new order placed, it'll tell you that, look, I already have 1,000 units with me. Based on my historical consumption, I only need 5 units, but you're ordering another 500 units. Are you serious? Of course, are you serious is what I have, but that's the response that the tool provides to the smart factory initiative, right? So these are multiple landscapes that I really want you guys to focus on, because as budding, I would say, analysts, I would want to call, because at the end of the day, for me, digital transformation is not just about automation, it's not just about process engineering. No, it's a combination of both digital and transformation. Personally, for me, it's more about, so for me, transformation is more execution. It's like, I know what is a R script or a Python script. What good does it make if I just know? I think the essence lies in execution. So my summary in the slide is, if we can know it, it's great. But essence lies in implementing those actions that we need to do, right? And that brings me to the last slide here. I normally give takeaways here as well. I'm not going to go one by one here. As I mentioned, digital transformation, so transformation is more important. I would want to kind of hit on the last point here. Data is the new oil, and many speakers have already spoken about this. So essentially what this means is I would want to give you a very nice example here. So I don't know how many of you have watched, what do we call Shark Tank? So I'm sure most of you would have Googled, right? So when you typically go to Google, you go to any browser history or whatever, any particular URL, it'll actually ask you, there's an annoying pop-up that comes in. It says, accept cookies. What all of us do is we accept it. But guys, do you really know cookies means tracker? That the browser is actually asking you the real question. If they were to ask you accept tracker, you would say no. But accept cookies is a very catchy phrase and you click on it. And little do you know that there are tons and tons of companies who are tracking your data. So this company called Generate, so look at the business model here. And I really want you guys to take some financial technology or whatever terminologies that you want to use here, saying that this company is trying to hit on an area that was not tapped before, which says that you click accept cookies, you're basically selling your data to the company. I'm going to pay you for the data you sold. This is the advent of digital transformation. So all I can say is digital is the next big thing, but transformation should be in your DNA. So with that note, I'll turn it back to the speakers for the next course. Thank you.
Thank you, Sadashiv. It is 2:38 a.m. now, midnight. So still you have joined and you are helping us. Thank you so much for your insights. And we'll catch up in the panel discussion.
Thank you, sir, for your insights. Now I request Aditya to introduce Mr. Gautam Danaya.
Thank you, Pranamya. I now have the privilege of introducing our next resource person, panelist, Mr. Gautam Danaya Math. Mr. Gautam is a chartered management accountant from CIMA UK, chartered global management accountant from AICPA US, and certified public accountant from Australia. He is presently serving as Principal Finance Officer at NSW Government, Department of Education, Sydney, New South Wales, Australia. He is hands-on in effective stakeholder management and value addition to the organization through the provision of sound financial planning, analysis, and management reporting support. His top skills include managerial finance, financial reporting, financial planning and analysis, budget.
Aditya, you're on mute actually. Just repeat the last two lines.
Okay, sir.
Yeah. No problem. No issues. Yeah.
He's hands-on in effective stakeholder management and value addition to the organization through the provision of sound financial planning, analysis, and management reporting support. His top skills include managerial finance, financial reporting, financial planning and analysis, budgeting, forecasting and variance analysis, internal audit, go-to-market channel business model, pricing, and audit data analytics. His earlier assignments were at Optus, TNT, Accenture Australia, HP, Oracle, and IBM India. I now request Mr. Gautam to render the presentation on the topic Reflections on Digital Transformation in Australia during the pandemic. Over to you, sir.
Thank you, Aditya. You're a true son. Hope I'm audible, Dr. BRR.
Yeah. Gautam, you're audible. Gautam, please keep in mind the time factor, please. 5 to 6.
Certainly. We'll do our best to make a concise presentation, and I would like to share my screen.
Yeah, you can go ahead. It is coming up, Gautam. Yeah, thank you. It is visible. Thank you.
Okay, right. So thank you, Dr. BRR, for this opportunity, and I would like to extend my thanks to all the famous business management for this excellent opportunity. I wasn't sure how I could add value to this discussion, but yeah, let's do our best. I'm one of you, basically. It's an ongoing process to share knowledge. So first thing I would like to begin with by acknowledging the traditional owners of the land on which we meet today, the Darug and the Kurgai people of Hornsby Shire, where I live in Australia, and pay my respect to the elders past, present, and emerging. And I would also like to pay my respect to the elders from the country of my origin, India. So this is a culture within Australia to start any panel. And this is my topic, as most of you would have had a glance through. And some of the contents that I would like to share here. This is what I would like to talk in detail and based on the available time. So managing economy. And to save time, let's move to the first slide. All right, I'm not sure why this thing is coming up. Is it still clear, sir? Are you able to see the slides?
Yeah, Gautam.
All right, yeah. All right, so one of the key things that's been happening during the pandemic is how we have adapted to various circumstances and how digital transformation has enabled a lot of process for the governments and also for businesses to survive. And what I would like to focus here is what Australian Commonwealth government and the state governments did as a response to the COVID pandemic, and how effectively the taxpayers' money was utilized, or it's being utilized. So one of the key things that the government announced is the job keeper scheme and the job seeker payments. They both are two different things. Job keeper is more for when people lost jobs, they need to survive. And as long as they're on the payroll of the company or the organization, they'll get this benefit from the government. Now, how are these schemes implemented? So this is where digital transformation played a big role. They had platforms which they were using, and you start with using those platforms and then you move on to a local office to present a lot of documents and inform them that you are the true identity of this as a person. Now, during COVID, visiting the office, you see a lot of long queues going around and people waiting to be heard. And this is where digital transformation played a key role, where the website, the MyGov platform was enhanced so that people can be avoided coming to the local government offices, and they still be benefited and they still continue to receive the benefits. This resulted in a lot of preventing job losses, businesses shutting down, and people getting into depression. And unemployment rate, it recently in last month in June, it fell to 4.9%. So you are one of those 95% people who have a job. It had peaked to 7.5% at the same time during the last year. And this is the response of the Commonwealth government, which we call as the central government in back in India. And in order to combat COVID and how digital platforms were used by the local governments, the state governments. So I'm part of I work with the New South Wales government, which is one of the states, popular states within Australia, and Sydney is the capital.
Gautam, sorry,
and the COVID.
Gautam, BRR here.
Yeah.
A slideshow you can enable.
Yeah. Okay. Is this better now?
Yeah.
All right. Yeah. So
I'm sorry, time factor. Sorry.
Yeah, no problem. So some of the things that what really happened and how the COVID was combated here and how the spread was stopped. And if you notice, only recently we have been having a serious problem here. But for over a period of 1 year, the situation was quite normal. That's because how the digital technology helped the governments to implement that, and how they tracked the spread of COVID with the QR codes that was used effectively. And one of the key things is like the governments here have the autonomy to manage the border issues. So New South Wales is independent to the Queensland and other states here, and those platforms that they created that enabled the police, the local police, to use, and you don't have to go to an RTO office or RTA office to see whether your license is valid, your car registration details are valid. All that was one with the click of a button you can see, just because the app was created and introduced to the people, and everyone has a mobile phone today. And one of the other examples that I would like to quote here is the digital transformation in hotel business. And if you go to a restaurant, you sign in with the QR code, and that will take you directly to a table. It will assign you a table. You can place the order, pay the bill, and it's all contactless service and payments. The only reason why you will see is when the food is actually served to you. And this is all, and it's an outcome of the current pandemic, which some of the experts said it's a necessity today. So just moving on, considering the time frame, I'll just move to the next one. Fintech in Australia. I think Surabhi already brought this example of the Zip company, what they did, and Australia being a platform for a lot of upcoming companies, fintech companies, and it has grown to be a $4 billion industry in 2020. And Zipco, the interesting thing, what the Zipco does is, I don't know how effective is the contactless payment back in India. My apologies, my knowledge has been minimum in that regard for a while. So you use your mobile to pay and go. You don't need an actual card. And most likely, there could be other companies who have enabled this sort of a platform back in India. And how you get that money is an instant credit check. And the way the technology has been created here, it's just the curiosity and the new business ideas that has led to this. It's an instant credit check that happens, and it connects the person bank to the zip pay straight away. You don't have to follow a lengthy process, and all this happens with the click of a button. Again, it's the idea that is behind this. And again, digital transformation in the automobile industry, where people have a lot of choices, and how do they meet those choices, what the platforms are created. So we can go more in detail, but I would like to just respect the time element here. And I'll just move on to the next slide. Right. So one of the key things that in one of my prior experiences being working in internal audit and associating with the go-to-market business model, what is go-to-market strategy when most of us use mobile phones. So that's the reason, that's a notable trend for the last decade, where everyone wants to have fancy mobiles, and how it actually reaches to the end user when it starts with manufacturing and goes with a series of processes, and how companies are providing a lot of rebates to distributors and resellers. And when a company is providing all those rebates to various distributors and resellers in the across the globe, there is an element of risk. And the most commonly risk that we speak about, and I would like to highlight, is the financial risk. So, for example, if one of you pay 50,000 rupees or 1 lakh rupees or 25,000 rupees, you must understand that it's as an end user, you are bearing the maximum cost for the company. That's how the companies and the distributors capitalize on. So that same product would be sold to a distributor probably for a couple of thousand rupees, and by the time it reaches the end user, it's sold at 30,000, 40,000, or 50,000 rupees. You see the different phases the product goes through here, and because the manufacturer is providing a lot of rebates. So as internal auditors, when back with one of my prior work experience, how are we adding value to the company? And in order to enable this function, and now because of the COVID pandemic, it's it's difficult to have this internal audit function because it involves a lot of travel to the site. There's a site visit that's involved, but in the current circumstances, we cannot do that. And how do we go about doing that? So now and how this function has been an ongoing process in the current scenario because of the technology. And with different regions across the globe, the manufacturers or the corporates use different tools for data, and there's enormous amount of data that is stored, preserved, and one cannot go through each and everything. And that's where business intelligence tools, programming, and all this in the skill. And I think Mr. Dangle spoke about SQL querying here, and that's one of the key tools that we used in order to make this process ongoing and come and arrive at a sampling process. When you identify samples, how do you identify samples? It's based on the volume of turnover and the volume of margins that is involved, and how that margin, there is a leakage within that margin. How do you identify that? And that's where you do the sampling, and that's where these tools enable you to perform that. And in order to when you have to audit a reseller or a distributor, he is just not a reseller or distributor for this company. He's got multiple manufacturers associated with him, so you cannot actually go and look at his documents in there. That's where we engage with the third party auditor, who would be normally Ernst and Young or Deloitte or all these commonly companies auditors that you will know, the big brands that you come across the globe. So we engage with them so that we can go to the site, and they have access to, they sign a data non-disclosure agreement, and they have access to those documents. And in the current scenario, all that is not possible because travel is totally restricted. It slowly started picking up. And how do we still achieve that? That's where the tools that are playing a big role in enabling the auditors to still perform this internal audit function and get access to the digital versions of the resellers' transactional documents in support of the audit investigation. And while I was involved in one of the audits, and this process, it enabled us to get to an audit outcome, that led to a recovery of close to $4 million from one of the resellers that was based in the South American continent. I would like to restrict the names. I don't want to highlight the names of those companies. It's again a disclosure issue. But what digital platforms did is, how they added value to the company's, margin leakages strategies, how to identify and recover that money. And it's an ongoing process because of the digital transformation today. Finally, I would like to talk about some of these, how the business intelligence tools that it enabled the finance business partners in developing meaningful budgets, decision making, and achieving outcomes. Because this is my role. I work as more of a finance business partner, which Mr. Dangle had spoken about earlier. So that's one of my specialist areas. In the current scenario, what are the ways that we adopted to achieve these outcomes, and what are the Moscow principles? It's all about the must-haves, should-haves, and the could-haves that we need to bring in. And all this is an outcome of a discussion that happened using digital platforms, because face-to-face meeting is very restricted today. And we use these digital platforms to generate ideas, discuss ideas, and implement those ideas. And there's a bit more we can talk about, but I don't know how much time I have right now. I probably would like to stop here and take
Better
any
stop, Gautam. Sorry.
Yeah, that's fine. I know, I can understand that.
Yeah,
And I'll
nice
just stop
background you have.
sharing, and probably I can share the presentation that I made.
Sure. That is in turn. I will. Yeah, we can do
Yeah.
that. Thank you, Gautam. Thank you so much. MCs, we will go to the next presentation quickly.
Yes, sir. Thank you, sir, for your insights. Now I request Mohit to introduce Ms. Bhavana Manchanda.
I feel honored to welcome our next speaker, Ms. Bhavna Manchanda. At present, she is a manager treasury of ICICI Bank. She is a legend and a finance graduate from IIM Indore. She interned at ONGC and American Express. She also have worked at HSBC Global Banking and Markets. I feel extremely proud to tell that she is the national finalist for Indian-based business case competition and ranked second in National Wall Street Fit. She ranks in top 10% of batch at IIM Indore. She has been an NTSC scholar and a national finalist for Analytics Olympiad. We are indeed happy to have you here with us today, ma'am. I wish you a very warm welcome. I request you to render the presentation on the topic FinTech, the future of banking. Over to you, ma'am.
Yeah, thank you, Mohit, for the warm introduction. It is an honor and a privilege to be invited to and participate in this finance conclave and listen to the views of other experts. So, talking about how fintech is shaping the future of banking. Fintech is the innovation that seems to break down the barrier of the future in the finance field. Every day, it is changing the way in which financial services are designed and delivered, and it is now catering to the needs of the modern customer. So there is an openness in the banking system now, and there is a collaboration which is bringing in new technologies. So if I ask you that how many of you are happy with your current banking scenario, so I'm sure that there'll not be a lot of show of hands in the same. So to talk about this, the bankers of the future will be very different from the bankers that are there today. So things from artificial intelligence, P2P lending, big data, blockchain, crowdfunding are becoming very common now. Even small banks are willing to jump into the bandwagon of fintech. Traditional lending is also becoming very easy and accessible. So the gap between what the bank is offering to us and the expectation of a customer is day by day increasing. And this gap is what fintech industry is catering to. So now the traditional banking have started to bring up startups into their spaces. So for example, WhatsApp has started its own payment system. Amazon is testing offering student loan. WeChat is becoming a common platform to transfer money. So the financial platforms of the future may not be the traditional banks, but the technology firms, which these firms are offering 24/7 access to the bank customers and offering services that are available via latest digital channels such as social media, internet, mobility. So if I see that the children born this year are probably going to open their first account not with an ICICI, HSBC, HDFC, but rather with an Apple or a Facebook. We can see that there is an immense growth of e-wallet and other indicators which are leading to the rise in financial technology, financial services. So wallets like Samsung Pay, PayPal, Android Pay, I think every one of you are on these wallets. And these are the major e-wallet companies on the world. So if you see the amount of money that you used to keep in your Uber wallet or Swiggy cash, compare 2 years back and compare it to now, so we all have become used to of these wallets because of a lot of reasons, like there is no requirement of entering the OTP again. We get cashback policies on these. The amount, the transaction cost is very low. And so there are a lot of thousands of new dynamic startups which are offering products which used to be offered by traditional banks only. So if we see, we can get P2P loan at a fingertip, and there is crowd investing. Cryptocurrency payments have become very common now. There's a lot of automated financial advisors. So now Citibank has introduced their own chatbot, which is telling people that where they should invest into. So and these new technologies are more and more transparent in what they are charging to the customer and are also substantially cheap. So these newcomers have the ability to pick and choose the part of banking they want to get involved in. So all these new startups, they are not getting involved in all parts of the bank. They are not getting involved in the regulatory reporting or post-dated settlement. They're just picking up the most profitable part and getting involved in those parts. So if we see, they're not becoming a deposit solution. They are happy to be part of the front ending role. So this is what the new trend is becoming. So fintechs in the banking and financial sectors normally offer their services in the form of product, application, business processes, and business models. So this is what the future is looking like. So talking about another thing is that now there are around 1.7 billion people worldwide which who do not have bank accounts. So fintech came as a savior to all these people, and it provided them an easy option to participate and access financial services without the need of any bank account. So they are the best option for financial inclusion. So they are one way they are a threat to the banks, but also they are educating people and they are making them financially included. So so in this case, I would say that fintech is a threat as well as a win-win situation. And to talk about the adoption in the fintech area, so as per the EY Tech Fintech Adoption Index, so the fintech adoption is currently around 58%, which is highest in China, followed by UK, India. And if we see that where most of the payments are being made, so the major chunk of the fintech is used for money transfer and payment. So for example, paying for a product or services with cryptocurrency, with QR code, using non-banks to transfer funds, paying with mobile phones. So that is constituting around 50% of where the fintech services are happening. And then the most common, especially in India, is for insurance. So there are a lot of insurance comparison sites, insurance rate calculators. So this is constituting around 25% of the fintech startups. And then there is saving and investments, which is constituting around 20%, in which there is crowdfunding platforms, there are investment management solutions, then there is online investment advices, and then the other things like borrowing, financial planning make the other part of it. So if you see, there are a lot of startups in each of the categories that can come to your mind for each of the following things. So this is how all these things are how fintech has led to financial inclusion, and the evolution of fintech had a major impact on traditional banks. So they, for the first time, banks have been faced with the huge competitors. So banks are now adapting and keeping up with how they should talk, how they should have interactive consumer interference. So fintech is not only modifying business models and infrastructure of high street banks, but it's also triggering the considerable shift in human resources. So if you see, the new fintech departments are creating in the rise of specialists with skills and expertise in both finance and development. Though there are some jobs which will become insignificant if the fintech is completely taking over the banks, but also there are a lot of jobs which will be created. So if we see that there is a lot of fall of traditional banking because of the massive impact that fintech is having, but it's not in the near future, because earlier bank used to be untouchable, and now the competition that they have been provided, they are not lacking behind. They are becoming an innovators themselves.
Bhavna,
So
here time, please.
yeah, I'll try to wrap up as soon as possible.
Please wrap up.
Yeah. So this is a benefit for the customer who has a more freedom now and flexibility than before, and now they can choose which financial services they need without making any sacrifices. So I think I'll wrap up right now, and if there is any question, we can take up in the panel.
Take up, towards the end, Bhavna. Thank you. MCs, go to next.
Yes.
Mr. Harish.
Thank you for your insights, ma'am. Now I request Alvin to introduce Mr. Harisha Rao.
Okay. Thank you, Pranamya. I'm indeed happy to introduce Mr. Harisha Rao, the Associate Principal, Data Science at Infosys. He has his hands on risk management, quantitative research analysis, portfolio management, and hedge fund operations and model development. Besides MBA, MCOM, PGDM in Finance from Bharatiya Vidya Bhavan, he is a FHARM, Financial Risk Manager from GARP USA. His past assignments include Academic Associate at IIMB, Thomson Reuters, Society General, and Dell. He has published a paper titled Impact on Deferred Tax Facility on Firm Value. He has won many Best Paper Awards in conferences, debates, and conventions. He was adjudged as Best Manager of 2020 in Infosys. Now I request Harisha Rao sir to render the presentation on the topic FinTech, Dark Side and Challenges. Over to you, sir.
Thank you. Thank you for Jain University for giving me an opportunity here. So I'll straight away move on to the topic in the interest of the time. And I'm the last speaker, and most of the speakers have, given a very good insights on most of these topics. So please let me know if my voice is audible and my screen.
Harisha, it's audible. Thank you.
Sure. So, I mean, like, if you look at, fintech companies, most of the things, which we see around is into, media and finance and professional services and financial insurance, right? These are on the top. But if you look at, some of the industries, government adoption of, fintech is very low, healthcare industry, construction, agriculture, these are the industries at the bottom, because they are really finding a challenge to involve this fintech more efficiently. So if I speak about a bank, it is very easy for a bank to adopt fintech in the areas of personal loan lending or credit card lending, but even they are finding it difficult to adopt this financial technology in the areas of commercial lending or risk and regulatory and other stuff. So if you look at wholesale trade, advanced manufacturing, mining, real estate, transportation, these are the areas, where the companies have huge real assets spread across, different continents, and it becomes really difficult for them to connect. Even, usage of Internet of Things, advanced technologies of, sensors, robotics, they are finding it big challenges here. So what are the exact dark side of this fintech? And what are the challenges they are facing? This is something which we need to cover in next, maybe 3 to 5 minutes. Okay, so this fintech is bringing in new source of traditional forms of risk. That means there are already traditional risk existing, but the new sources are getting added to it. Okay, this is first category. Second category is the new forms of risk itself, is getting added to the list of the risks. Okay, the first category is the risk exists, but new sources are getting added. Second category is the new risk itself is getting added, and the third one is entirely new markets, new systems. No one has any idea. It is just trial and error method. People are getting into it. So, for example, I'm just taking one or two examples here. Technological risk and data privacy risk. These are on the top of fintech, but currently, as per the bank regulation and Basel and other things, these are considered to be a part of operational risk. But such a big risk, technological risk and data privacy risk cannot be under, some other risk called as operational risk, because they cannot assign, such budget and volume and resources, time and energy for handling this cybersecurity risk and data privacy risk under the heading called as operational risk. So banks or, regulatory have to think about it and have to come about think as a separate type of risk and concentrate more on this type of risk. Mr. Govinda initially was speaking about digital lending, and today we can see that a lot of tech up companies have come in lending and payment applications, because it is very easy for them to use the alternative data for modeling. There was a say right earlier, if we used to teach banking subjects 5 to 8 years back, we used to mention this: why banks only are there in lending business? Why can't others enter into this business? A big question, right? Why only banks are into lending business? Why not others can enter into lending business? Because banks had privacy to the data. They had the passbook, your savings account, recurring deposit accounts, and fixed deposits accounts data. They used to validate who is the right customer, who is the wrong customer for lending. But today, the startup companies, fintech companies are using alternative data, like using social media data, utility bills like electricity bill and other things to evaluate a credit risk and offer the loans. But this is just piling up of risk to some extent. By using an advanced like analytics, we just like to say that okay, this person is better in credit, but like as per the traditional risk models, that person would still be not eligible for a loan. So banks are taking a calculated risk in the areas of personal loans, credit cards, but not in the heavy, huge investments using this fintech technology. We should understand that. And robotic, like advisories. Some of the investment management, wealth management companies are using it. Like huge data is getting exposed while like sending the personalized feeds to every single person. What should be your stock balance today and what you should buy, sell today. That actually exposes the personal like data to wide set of audience. Like a company would be dealing with the third party vendors, a company would be dealing with consulting firms, a company would be dealing with like service providers. So this data actually gets leaked in multiple ways. And if you look at the challenges for the startup companies, the cyber insurance premiums have tripled over the period of like last 2 years. So where do you pay so much of premium and like safeguard your company? Economic impact is fivefold. The reinsurers are actually thinking about business, how to think like new models for these fintech companies. Digitalization has increased the fraud at scale. Instead of a thief used to think about hacking one account, now because of digitalization he can hack the entire like banking system itself. So at scale it has increased. So the snowballing into financial destabilization might lead to like big issues for the government and national security and other things. Okay. So MRA and topic modelings are a couple of areas where banks actually can think about like new areas. So why fintech fails? Like underfunding is one of the major areas. They would not think like how much new investments they have to do in ever-growing technological changes, choice of venture capitalists, regulatory and compliance. They're not even aware of like regulatory compliance because they would have not had a compliance officer at the beginning, but they would hire at the mid of the like program, running the transformation program, but that might lead to a failure. So it is better to like involve a compliance officer right from the beginning, a legal advisor right from the beginning, to have a very good like transformation program to be successful. Highly competitive. It is very easy to enter, but like very difficult to sustain the business. Economic downturn is something which we are seeing. The COVID period, a lot of the businesses had a tough time. And fintech should not be confused as just a technology startup. Like technology startup might be bringing a new software or technology, but fintech is something different. It involves customers. Today, if you look at the contact center volumes, the call center volumes for the fintech companies, it is very huge. And the contact center agents are not trained enough to handle the cases which are coming in. So these are all like very big challenges in front of like fintech companies. Though it looks rosy at the outside, but a fintech entrepreneur or a fintech company would actually be facing every day these types of like heavy risk. These are just a couple of examples of cybersecurity and data breaches, which we can like take as an example and be more like cautious in the future. Okay, so with this there are a lot of topics to be discussed, but in the interest of time, I'm just like closing my lecture. If there are any questions, we can like go ahead.
Thank you, Harish. Nice presentation. So we'll go to the panel discussion. MCs?
Yes. The next agenda is panel discussion on the topic Fintech and Digital Transformation, Perspectives and Epilogue. The panel will be moderated by Dr. Bhatni Raghavendra Rao, that is Dr. BRR.
It is an honor to introduce Dr. Bhatni Raghavendra Rao, sir. He's working as Professor and Area Chair Finance RTCP at CMS Business School, Jain deemed to be University, with 4 years of corporate and 29 years of academic experience. He is the research guide for PhD program of Jain deemed to be University. He holds master's degree in commerce. He is a PhD in the area of finance. He is the fellow member of Institute of Cost Accountants of India. He is a chartered financial analyst. He is a chartered management accountant from CIMA, UK. He is a chartered global management accountant from AICPA, USA. He was a visiting faculty at IIM Indore 2013 and 14. He had the privilege of drafting accounting policies for his organization, Jain deemed to be university. He did course on decision making using financial accounting from IIT Madras with 97% elite and gold class. He's an IBM data science professional. I humbly request BRR sir to take over the proceedings and launch the panel discussion.
Thank you, Sanket. So greetings one and all once again. Let us now start our panel discussion. In fact, as far as time is concerned, it is 12:45. We need to close it by 1 o'clock. 5-10 minutes, I can request the experts. Beyond that, it is not reasonable. So what I will do is that with the permission of everybody here, experts and the participants and my fellow colleagues, so please permit me, what I can do is that we will club the panel discussion and the Q&A, because essentially we are going to cover Q&A in the panel discussion. Unattended questions would be taken up here. So fine, now I once again welcome all my friends, industry experts to the panel. A couple of questions are there here. Now I will ask the questions, okay? Because of paucity of time, anybody can answer these questions. One student by name Rajesh. So his question is, what are customer experiences and payback? There's a question from a student. Anybody would like to take this? Anyone from the expert?
May I go ahead, sir?
Yeah. Surabhi? Yeah.
Yeah. So customer experiences is how you design the interface, the product, the digital product itself, and the platform where the customer is interacting, whether it's a retail, a B2C customer, B2B2C, or a B2B customer. Knowing the customer pain points and at every stage and every process, even after onboarding, usually we see banks onboard in like 2 minutes, 5 minutes, but what happens when you are trying to do something, change your NPS or something like that? So deep customer focus and micro customer segmentation that is what drives the experiences. And as Harisha sir rightly pointed out, the fintech failures. So it's very important for fintech to know what is the payback time. You see a lot of big tech and a lot of funding going for these fintech companies, like mind-boggling numbers. So the amount that is spent in customer acquisition is great, but what is the payback and what is the customer lifetime value? I think that is the way a diligent fintech entrepreneur would want to operationalize and see how the fintech can sustain, scale, which direction it wants to take. Does it want to exit out of it? Does it want to get acquired? Does it want to collaborate with banks? Or it wants to grow itself into a bank and scale further, diversify, or become a large, a software services provider which has all sorts of solutions.
Thank you. I have another question. Anybody can answer, or two or more of the experts can answer this question, because it's more of a consulting question. So being an academician, I have an agenda here. Now the question is, how do we embed the fintech in our curriculum? Because fintech or digital transformation. So because technology is horizontal, it is omnipresent, whether you do finance, marketing, or any specialization for that matter, technology is horizontal. So how do we embed fintech in our curriculum when in the academic structure? So any one or two can help us understand how do we bring the fintech into our curriculum so that industry and academia gap is taken care of.
Maybe I can get started. So my perspective, sir, is I think fintech digital transformation is now becoming the getting ready is not an option. That's how I would start, right? So we need to be at least a couple steps ahead. So for me, if you were to ask me, so if it's a 2-year course, I would strongly urge that a good 4 to 6 months is spent only on this. Call it as specialization in business analytics, because the industry wants this. They call it as industry 4.0. So a nice mix of tools like Tableau, Alteryx, Nine, plus the nice mixture around finance related topics will be the blend that we are looking for. So I personally feel curriculum inclusion as part of the semester, perhaps an internship as well, is what can be a nice segue into getting into business analytics and digital transformation.
Thank you, Sadashiv. Any other perspective from anybody?
Probably I can just add in my thought also. So from a fintech standpoint, one needs to understand before someone starts a fintech, it's all about an idea, right? Like what kind of a fintech or what kind of service is my fintech going to be? If there are courses or maybe some kind of training or guest lectures from some of the industry experts on having that idea generation or a thought process being inbuilt in the students, that's going to be a great way. Technology comes in the later part, like how do you do it? But what do you want to do from a fintech standpoint is more critical, if you ask me. It's all about the idea. Then you build a background from a technology standpoint. So if you can have something more of that, probably in your final year or a year before that, that's going to be more helpful for the students also.
Yeah, if I can take one more perspective on the same question.
Yeah, so I can.
Yes.
So basically, there should be two level of inculcation here. One is the generic idea about the fintech. So before that, obviously, the student should have an idea about the finance topics, broader perspective, right? Let it be a banking subject, or it can be investment management or anything. And the second layer should be the introduction to the financial technology and how do we differentiate from the regular technology with fintech. And the third layer is specialization. A person cannot specialize in every single area of the fintech. It involves, as we mentioned already, a lot of people discussed, it may be compliance related issues, it can be legal related issues, or pure technology related issues, right? So how do we handle this? So these are the subjects which has to get into a specialization subject. So there should be at least, two-layer system within fintech. And there is a lot of growth rate. We are expecting the growth rate of at least 15 to 18% in next 2 to 3 years in this industry, and it's already a market of $111.5 billion industry. So, and it is expected to grow every year. And India is almost in the third phase in the after US, China, and India is definitely doing well in this area. So our students will definitely get benefited if this is included in the curriculum and given an opportunity to learn.
Thank you, Arisha. Point taken. Again, representing Jain University, I'm tempted to ask one more question because our thrust area is entrepreneurship. Jain is known for entrepreneurship. So my next question is, in fact, there are two sub-questions. One is digital transformation and fintech. What are the opportunities when it comes to entrepreneurship? And secondly, job, that is job market, employment, of course. We'll take one by one. Before that, a small announcement to the participants. Please look at the chat box. There is a feedback link provided there. Please click onto that and give your feedback for the conclave, the proceedings of the conclave. So again, I'm appealing, I'm repeating, dear participants, take a look at the chat box. There is a link provided there. You click on that, trigger that, Google form will open. Please give your feedback. Thank you so much. Yeah, so coming back to the question, so this is the scope of fintech and digital transformation from the entrepreneurship perspective and in the employment. First, we'll take entrepreneurship. What are the areas, spaces where we can look for entrepreneurship opportunities as far as digital transformation is concerned? Thank you. Anybody can answer, anybody can add perspective. Govinda, you can take, you are an entrepreneur. You have to unmute, I think.
Yeah, sure. So, sir, first of all, what I believe is what you're suggesting is right, that it should be outcome based. Either you want an entrepreneurship career or you want an employment career. And if you're looking for an entrepreneurship career, honestly, like the first step is to find a real problem, a problem which is not a concept, but a problem which people face. Let's say you go to a bank and a bank takes 2 weeks to approve your loan. So that's a real problem. Or for example, let's say sometimes what happens is what I've seen a lot of people do is face is that their CIBIL score was impacted for reasons which were out of their own control, or it was bank's fault. So if someone can build in some intelligence and support banks or current fintech digital lending firms with with ideas which banks ignore because CIBIL report does not account for those fair mistakes. I think that's a good model which someone can build on. That's an idea which someone can build on. But honestly, like when you go about entrepreneurship, the first 3 months should be spent to understand what the problem, like, is it a real problem that you're solving, or is it just a concept? Like people talk big English words, but honestly, when you get into entrepreneurship, no one will open the door for you. So you have to find that right problem and then solve for it. And if you see why fintechs compete with banks and why they complement banks, is that banks have a very big breadth of products and services which they offer. So if a customer has 10 problems to solve, a bank would be able to offer them all of them. But a fintech specializes in solving 1, 2, 3 problems for the end customers. So whenever you are building a fintech firm, you have to think through in terms of what is the problem that you're solving and why are you better than a bank. And only then, like your firm, you would be able to grow organically, while it would open opportunities for you to partner with a bank, because bank knows that, let's say, if I need to offer a gamut of 10 solutions, I can borrow 3 from this fintech, and 7 is what I can offer from my basket of services. So when you go about building a fintech, it is all about like knowing the on-ground problem and finding the right customers, finding the right problem to solve, and then a profitability perspective would be the second step. But initially, you would at least need to set up potential PE, VC, and angel investors, and then like things will start to fly off.
Thank you, Govinda. Any other perspective from entrepreneurship perspective?
Sure. So just I'd like to add one. In the last 2 years, am I audible?
Yeah. Please.
So in the last 2 years, like I got an opportunity to work with multiple, government, organizations of India. I mean, like their requirements, are into, translating all their, physical documents into digital documents. They're sitting on piles and piles of documents, and they do not know how to, digitalize it. And, most of them are sensitive. And most of the science service providers would quote a huge, amount to do this. And within the prescribed time, it will not be possible. So the best thing at this point of time is, like a small entrepreneur can take up a specialized, area of OCR, that is, optical character recognition, with some good, machine learning technologies on NLP side, translating all those physical documents into, digital documents can be a very simple startup, but, it is a very, very lucrative area, which we have noticed, in the recent past. So there are softwares available, but it is very difficult to customize, to the requirements of the organization's document structure, size, and other things. Huge documents to be converted to, like digitalized documents now. So this might be one of the area.
Thank you. Point taken. So coming to employment, people say that technology is taking away the jobs. So all this digital revolution is taking away the job. But Gartner research says that that is not the case. There is a net addition to the number of jobs. What are your thoughts on that? So that people are capable and they're competent to get the jobs in digital transformation and fintech space. What are the key competencies and skills that they have to hone?
Being a technologist, probably I'll add in my thought here. Sure. So when they say new tools and technologies or even new things are taking away jobs, it's not completely true. It's like what you used to do 50 years back from a job standpoint, it's not the same job that we do today. It's only that the jobs have changed. The tools or the technology that we use have changed. The basic core intention of any particular, say, product or even bank is to provide customer service. All technologies that we currently bring in, it's to aid in better customer experience, because end of the day, that's what's going to drive your revenues. And in terms of job creations also, it's the new things that any new graduate has to learn. Take it emerging technologies. Big data was a big thing 5 or 10 years back. Big data is a norm today. It's not a big word. Right now, it's artificial intelligence and a lot of new things that's coming up. But trust me, 5 years down the line, that's going to be, it's already a given. So new things will keep on coming. It's only from a job standpoint, stay relevant, stay updated, be open to learning. That's one key aspect, no matter you are a 25-year-old or a 40-year-old or someone who's retiring in the next 10 years. be adaptable. The more you embrace change, the more you're going to learn, the more you're going to be relevant. If you think I learned Java 10 years back, I'm going to survive with that, it's not going to happen. It's all about learning and adapting. Like someone pointed out, a Charles Darwin saying, right? It's not the strongest who survive, it's someone who adapts who survives. So the same thing goes from a job market also. Stay relevant, stay up to date, know what's happening in the market. That's the only thing that will keep you employed for your entire career. Else careers are short-lived if you don't learn and if you don't grow also. That's what I would say.
Valid point, especially for the youngsters and the students. Any other perspective, or can I take the last question? I actually almost one now. So if you permit me to take the last question. Last question is same, fintech digital transformation. What is the social impact? Is it taking care of the digital divide, less privilege? Because people, when we talk about these things, people think that we are very flashy. It is only for rich or English speaking or privileged class. In fact, it is addressing the needs of the underprivileged. But anyhow, I want experts' opinion when it comes to social impact of this fintech and digital transformation. Thank you.
So I can start. Sorry, go ahead, please.
Yeah, so I just want to say that technology, the fact that there are mobile handsets, I think people are maybe malnourished, but they would have mobile handsets in India. That's the reality. And that's and India has DBT, direct benefit transfer, and you can see the exponential rise in getting them included in the financial ecosystem. Technology is one of the ways of ensuring that even if the farmer is able to use agri-tech, is able to use technology. Fintech is inclusive and is bringing the unbanked into the folds of our ecosystem. Like the BC model, which the banks were trying to do in India, couldn't reach what a Google Pay is doing right now. So I think the social impact is tremendous, and we'll see more emerging technologies. Like the World Economic Forum was looking for someone who can use drones for social impact. So definitely, there are ecosystems that talk about a lot of social impact and trying to reach out to every individual with the latest that is possible, whether it's social benefits or it's financial aid. I think basic income would eventually and hopefully get accepted, and we would be a better society as a whole.
Thank you, Surabhi. Any last perspective or your response to this same issue, social impact? Anybody?
Maybe I can start. So I feel in retail, right? So they say 90% of unorganized sector, is retail. So similarly, I think rural India cannot be left out. The mass is rural India, right? So I think it's not just from India perspective; it's across. I think. So from a societal angle, be it the example that I gave about the cancer from Stanford University professor, or be it the sample collection that many hospitals are trying to pilot, right? So you need not come here as long as you have internet facility, which one of the speaker mentioned that through Geo and all these kind of things, you can actually go get a virtual diagnosis done as well. So I think rural India and other societal impact is actually being not just being challenged, it's actually being it should be considered as an opportunity than just being left out as a whole.
Thank you, Sadashiv. It is already 1:02 now. We have to respect the time. So what we will do is that in order to, of course, I have got plenty of questions. So many questions I have got. I think it will take maybe 1 or 2 days to settle all these things. What we can do is that we know the credentials of the participants in terms of their mobile number and email ID. And also we have taken the chart script, entire thing and questions. So what we can do is that one way is we can connect with the experts and get back to you. And if you refer to brochure that our Conclave brochure, you have the LinkedIn connect of each and every expert. You can talk to them over LinkedIn and get started, of course, either through us or through directly. You can reach out to them and then you can settle your questions. I'm sorry for that because we are already, it is 1:03. So once again, I thank all the experts, bang on time. In fact, people who are in the participant community, especially students, look at the time that they were all before 10 o'clock. Again, I'm repeating Anushasan discipline. That's why they are the achievers. That's why they are that side. I think out of 8, 5 were my students. In fact, I had the privilege to teach them, but they have come here to help us to understand better. That's what they are. Okay, so they are more informed. They are very, very innovative in their approaches in their respective field, and I look up to them to learn. In fact, I call them and learn what are the recent happenings, because that's how the learning process is all about. So once again, I thank one and all. And we know that I think you are there, you are capturing the photos, right? We know that. Are you there? I
Yes,
think,
sir.
yeah,
Yes,
exactly.
sir. Yes, sir.
Any other thing you would like to ask me to do? And then otherwise we'll go to MCs. This thing, vote of thanks, is the next thing on the agenda. Sorry for not taking all the questions, dear participants. And I have told the solution. Either we can reach out to you, or best thing is direct approach. You just, in fact, some of the experts out of 8, 3 I was not aware of that. Thanks to Sadashiv, I got this thing. Thank one and all. Sadashiv, it is already midnight for you. I think today's sleep, I think, went for a toss. Sorry for that. Gautam, it is already evening. I think dinner is waiting for you, I think. And thank you one and all for your contributions, insights, and being on time. Excellent, actually. Excellent. So I don't know, I don't have words to express my gratitude. On behalf of finance area, CMS Business School, Jain deemed to be university, I thank you. Over to MCs.
Wow, this has been truly a Netflix front row thriller for all of us. The guests have led us through a fascinating journey showcasing the potential of fintech and the exciting future ahead. Pranamya, today I made an investment and had power supplements. What rich returns in very short span of time.
I agree. I feel the same way. Before proceeding, I would request all the participants to fill out the feedback form shared in the chat window. I would now like to propose the vote of thanks. It is said that that a moment of gratitude makes a lifetime difference in your attitude. I am sure this is how we are all feeling right now. It has been a privilege and a great pleasure to witness the panel discussion, to get the opportunity to not only understand the way fintech is transforming economic activity, but also to see the passion that all our stalwart guests have towards these breakthrough developments in finance. This has been a truly memorable learning experience for the student community. On behalf of the finance area of CMS Business School, I take this opportunity to thank the eminent panel of this International Finance Conclave 2021, Fintech Digital Transformation in the Pandemic Era. A heartfelt thank you to Mr. Sadashiv K. Vasishta, Director Business Analytics Honeywell, USA, Mr. Raghavendra Prasad, VP Digital Transformation, JP Morgan, Mr. Govinda Badada, CIO Proprietary Fund, Mr. Dayesh Angle, Director Finance, Capita India Private Limited, Mr. Harisha Rao, Associate Principal, Data Science, Infosys Limited, Mr. Gautam Danaya Mutt, Senior Finance Officer, NSW Government, Sydney, Australia, Ms. Bhavana Manchanda, Manager Treasury, ICICI Bank, and Ms. Surabhi Gaude, Associate Director, Capgemini Invent. We appreciate your generosity in sparing your valuable time and sharing your priceless insights. Your mentorship is immeasurable. I would like to thank all the patrons of this event, Dr. Chenraj Roychan, Chancellor, Jain Deemed to be University, Dr. N. Sundararajan, Pro-Chancellor, and Dr. Raj Singh, Vice Chancellor. I would also like to thank the advisory board of this event, Dr. Dinesh Neelkant, Director CMS Business School, and Dean Academics, Dr. Harold Andrew Patrick. A warm thank you to RTCP Chair, Dr. Batni Raghavendra Rao, who conceptualized and led the vision of this event. I thank all the planning and operational contributions of Dr. Preeta Chandran, Finance Area Chair, all the faculty members of Finance Area, Mr. Harsha, Manager, and admin staff and student volunteers. Finally, a big thank you to all the attendees, including chairs of other areas at CMS Business School, faculty, and students from our campus and other campuses, industry attendees, alumni, and other professionals. Your role too has been pivotal in making this event a grand success. Thank you one and all. Now, We can be informed and energized participants in FinTech's digital transformation of economic activity. Thank you. On this note, myself, Pranamya,
and myself, Sanket, are signing off from the event. Hope you all gained the fresh perspective and had a memorable experience attending the conclave. Thank you.
Thank you, one and all.
Thank you.
Thank you, team. Bye now.
Thank you, team.
Thank you. Thanks, everyone.
Thank you.
Thank you. Thank you.
Participants, just see the feedback link. If you're not done, please do it as early as possible. Thank you, one and all.
Thank you, everyone. Bye-bye. Very well done. Thank you, BRR, sir.
Thank you, sir.
Thank you, professors. Thank you, team. Thank you, sir. Thank you all.
Thank you so much.
Thank you, ma'am. Thank you all.
Thank you all. Awesome
Thank you,
job,
ma'am. Thank you,
students.
sir.
Yeah, good job, volunteers. Thank you so much.